I asked my kid to actually charge my headphones. I have these, I don't even know what they are. There's a little device you have to put the charger in, and then you swap batteries every so often. Well, he put it in battery backwards. So that didn't work out. All right, well, let's start with this. We're going to start a little bit differently today. I'm going to focus on psychology first, then we're going to focus on volume profile, if that makes sense. Let's do. And some of these things, some of you guys might know it, but I just don't think some of you guys apply what you know to what you're doing. And a lot of times you guys get, a really hot streak in the market, and you forget the rules of the market, right? Sometimes you forget what the purpose of the market is, and you get lost, right? And a lot of you guys that come in from from different discords where they preach the 1,000 bangers, they teach you can buy a Lambo in 6 months. Of course you can, yeah, you can do all that, but you're not going to succeed. In trading, it takes patience and discipline. And if somebody tells you you can develop patience and discipline in 6 months, how many of you guys are on track to read 15 pages per day that I gave you at the beginning of the year? Beyond?
Nope.
Missed a few days.
You know how many pages you would have read by now? You would have read about 1,300 pages, guys. And you translate that, average book that I read is close to 200 pages. Besides the one that freaking Burnside sent to me, it's 1,400 pages. So it's the discipline that you have in life also that drives your mentality in trading. If you wake up and your bed's, you're sitting on the computer right now and your bed's not made, what the fuck are you doing? I don't know if anyone watched that. There's a Marine, or I don't know, maybe a sergeant speaking, and he said the first thing that you can change the world is by making your bed. And a lot of you guys fail at small activities, but you anticipate to go in this mammoth of a market that has. I'm not sure if you guys even know how much information is shared in a stock market, but yet you fail to discipline yourself to do the little things. 15 pages a day. I mean, I know for a fact, and this is TMI, but the guys take too much time taking a shit. If you just put the book in the bathroom, you'll finish the book. And if you can't focus to do the same thing over and over, if it's, I challenge a lot of people and stuff. If you can't do, let's say you say, I'm going to do 10 push-ups every morning. And if you can't do that every morning and you say you don't have time, that's bullshit. You have time. You choose to do, and the world will gravitate, and you will gravitate towards the easier things you can do. It's much easier to go on TikTok and slide 5-10 times than it is to do the 10 push-ups. Or it's much easier than, hey, I'm going to go back to bed anyway, so why should I make it, right? And those are the things that impact you in trading as well. Once the market opens at 9:30, most people correlate only, like we talked about the TPOs and market profile, they only correlate time to open and close. You should not be itching to trade if you don't have an edge in that trade. I mean, 9 out of 10 times, none of us know in the first 5 minutes where the market's going to go. If you do, then, I need to learn from you. And a lot of you have that itch to trade because you don't have the discipline to hold back. You don't have the discipline in life, whether it's, gym, making bed, reading, or whatever that is. You don't have the discipline. And most successful traders that I've met, they come in from a very disciplined mindset. Whether, they attended, military or some special schools, or they were raised totally different. That's, what Mark Douglas talks about, right? Is most of us are raised the wrong way, not the wrong way, but given parameters and guidelines. And then you come to the stock market. Stock market is not your mom or dad. It does not care if you fall or lose your ass off or lose a house. It is just going to move on. I see these you guys posting from is it Reddit or whatever, I don't know where you guys grab those stories where a guy puts in his life savings into AMC and then he loses it.
Yeah,
I mean,
it's like Wall Street Bets on Reddit.
yeah, or whatever the name is. Do you guys really think Mark is like, man, this guy just sold the house and put money in this stock. Let's give it back to him. It's a zero-sum game, guys. Nobody gives a damn but yourself. The only way you can participate in this game is if you have capital. As soon as you lose capital, and some of you have lost a lot, some of you have not, so the fear, right, kicks in. And you guys will a lot of times struggle because you're trading with the fear. And I'm not picking on people, but I know, for instance, Dumpster, right? I mean, I love him, right? I mean, we pick on him, but jokes aside, he really is my favorite to mess around with. But I see him; his charts are better than mine. He literally outlines every short, every long, but he doesn't pull the trigger. And there's always a different excuse when I message him or he messages me. I stepped away, I stepped this away. Sometimes I'm like, maybe you're not stepping away, maybe you're just afraid to pull the trigger, right? And a lot of you guys, especially you lost money, I call it like a snake bite, right? If you got bit by a snake and then you see a snake again, I'm pretty fucking sure you're going to be a little hectic to, scared to touch it. And it's the same concept in trading. And when I mentored one of the people in this Discord, I worked with him and he blew 30K within 2 weeks or less. $30,000 blew up. I tried to explain to him that he's gonna blow it up, but it's almost like I wasn't there. And if I'm teaching you something and you're not listening, do you know what I do? I just raise my hands and I let you go fail. Because it seems like you know better and you're continuing against what the market's telling you. Market generates so much information, and the only thing that we are asked to do is to understand the market from higher level, which I would say, by the end of this session, most of you guys should understand volume profile and understanding the reading of market structure. Then you take that information and you take a statistical edge, a probability, and then you make your decisions based off that. If you're trading just because it looks like it ran too hard, well, or it dropped too fast, then the odds are that you're not going to succeed very long. On Friday, does anyone recall me grabbing calls at 38.50 or buying future longs?
Yep.
How many of you were thinking he's stupid?
I thought you were early, but not stupid.
Yeah, and I caught 22 points. And that's understanding, right? The market, the way, and we'll cover this, but the way long-term buyers come in, the short-term activity, where's majority of the volume coming from? Well, on the short time frames, it's from idiots like myself and you guys. On short time frames, do you guys really think the hedge funds exchange shares on the short term for 20 minutes? It's impossible. I've never met anyone that works in part of a hedge fund or any of those pension funds where they're like, yeah, man, we're going to buy Apple stock for 15 minutes and get out for profit. I've never met a person that works there that said that. Do they do options? Some of those, like, for protection. Pension funds, most likely not, right? You have different ones, if they use arbitrage opportunities trading, they do that stuff, right? But they have a purpose and a reason, like JPM Colors, right? How many people wrote off JPM Color just a few weeks back? And they were laughing, oh, they lost so much money, blah, blah, blah. 39.50 is not going to happen on SPX. Well, who won now? As we approach the March, you see where we are, 3,800s. So they had a plan, they stuck to it. They know, I mean, of course, they have a little bit more power than me and you to manipulate. I'm not saying the market is not manipulated, but that's also part of the market information. If you know a big boy like JPM is putting in, a notional value of like maybe $500 billion onto something, well, you better believe it's going to gravitate towards it. Just like that not too long ago, there was a trader that put a notional value on I think a 1 week or 2 weeks. Don't call me, right? Don't recall the exact time frame, but it was like almost $6 billion notional value in 2 weeks out. Those people had a plan, an idea, and they saw something in the market that gave them an edge to execute something. And the guy probably made money. I don't know. I never tracked down to see where he closed, but I'm pretty sure he made money. And the way you guys treat your money is, it's like, hey man, it's a 1K challenge. If I lose it, I'm just gonna fund it again from my savings. Until you get rid of that mentality that you can just replenish something that you lost, you'll never grow. Your job is really to find the edge. And I think from the teachings in this Discord, or if you have an edge somewhere else, sticking to the edge and waiting for those to show up is the key. Because the market's unique in its own way every day, but it does have patterns and things that repeat. Whether you're using volume profile, now you guys have clouds on, on the straight lines. If you just focus on something, and what I mean focus, like truly focus on that to understand it, and you don't have to tell everybody, you don't have to, oh man, this works. You nail it down first, and there's people on this Discord that created their own strategies, and they're profitable. And we even, Sequence even coded it for them, but they were focused finding what works for them. What works for me might not work for you guys. And when I teach you, I don't tell you that it's right or wrong. Like, for instance, Josh trades slightly differently than I do, right? Sometimes he takes high risk trades, sometimes he takes low risk trades, but at the end of the day, he's profitable, and that's what matters. He found something that works for him. Okay. And a lot of you, and you guys know how much I preach the one on the right. If you read the Trading in the Zone, a lot of you guys say that you accepted the risk, but then a lot of you are like, well, I'll just increase the risk, meaning that you double down or you just ignore the stop loss altogether. So does that really mean that you accepted the risk? First of all, it means that you had no idea where your profit or stop loss was and why. If you're not accepting it, you don't trust your own strategy. So you should not be in that trade to begin with. Because usually stop loss for me means if this breaks, man, it's going to reverse. It's going to do the opposite. And who am I to tell or control what the market's going to do? I cannot influence the market. Just like you guys, and I guarantee you, if you think about it, a lot of you guys and girls, you try to control the people around you, directly or indirectly. It's called manipulation. Whether it's your own kids, yeah, you can have eggs or apple for this morning. You're not giving them a freedom of choice. You're giving them an option, right? Which both benefit you. And you're just giving them power to make a decision between the two choices you gave them. Well, same with you guys. I mean, you cannot tell the market, hey, you can't do this, you should do it. No, market's going to do what it wants to do. Market is there to facilitate the trade between buyers and sellers on a very large quantity. And, sometimes you have big boys come in at a certain level and sometimes you don't. So it can be drastically influenced when those guys are involved versus your position. If you're short and those guys come in to buy longs, just like they did, remember, not this tap, but there was a tap to January value low at 39.24 2 weeks ago when we got the 130 points run. How many people anticipated that? Somebody on Twitter will say, yeah, man, I was aware of it. This thing told me it's going to run. But if you look at it, hindsight, you'd be like, oh, man, it is a previous monthly value area low. And if you know rules about value area lows and exploration of them, then you're like, oh, man, yeah, they filled the whole 80%. And now we're going to bounce here because there's different time frame buyers coming in and controlling the market. But if you're shorting somewhere at 39.25 that week, and you said, hey, if you break 39.30 or let's say 39.35, you're looking for a little bit more points and risk, and you don't get out, what happened to your trade? You got blown out. You got destroyed because the market went off another 130 points. And then the mindset that you're in, you're thinking you're wrong, that you don't know what you're doing, and that the market's manipulated. All of the points that lead to you not really accepting the risk. If you would have just accepted the risk and you saw the market switching and you go with it and don't fight the trend, you would have done much better. And once you're able to execute those stop losses and identify the pivots, and I don't know if you guys noticed, does anyone notice lately on Shorty's Corner that I've added something I haven't before to help you guys in the notes?
Plan.
Say it again.
You have a plan.
Yeah, you've been
I added
added pivots.
I added pivots for you guys. These are not pivots coming out of my, out of nowhere, but I added pivots for you guys to tell you where my sentiment changes. And those pivots, you guys see them too. And, if you're not there, it'll take a little bit of time, in the Discord for you to find them. But just take a look at the last 3, 4, right? We talked about, 40, 16, 15 being a key pivot because that was a January POC, remember? And if you look at it, how many times did the auction fail? Right there at it. Well, we know about the auctions and how they work and why it failed. So that was a key pivot for upside. Does anyone recall a 4056 level? I think I screamed at it 2 weeks ago a lot.
Yes.
A lot, yeah.
And all of these levels, and I'm not bragging, but they're all in my head. 3 months ago, I believe, Mrs. I don't know, Beans on, we had 39, 60, and 66 level. And we said, man, this was a huge pivot for the upside. I don't know if you remember Bean or if he's on, but it was a huge level. And those pivot points that I post are for you to kind of shift the bias. If you're playing a trade, you're shorting, let's say the bottoms, which is not my favorite, then you have to know where do you switch and willing to accept. If you're long, let's say when that 4016 failed, well, then you had to know where's your pivot for where the bias switches to the downside. In that case, it was 4004 because that was our previous week value area. What high? So you have to understand the shift of the market and what's it telling you. And we know that. I don't mark those levels of the previous week and value, and there's just have a fucking level. And I've explained this to you guys before. No, they tell me the sentiment shifts. They tell me what is it that they can execute. We just executed, weekly 80% to a T. We executed the January also, right? Even though it was explored previously, but we came back and redid it. But the key is, if you understand the pivots and the shifts, you have to accept the risk that you define. Some of you guys put the risk so tight, and then you get stopped out, and 10 seconds later, and I'm speaking about TJ now, your trade goes in a way that you planned it to go in. And that's okay. It's better to have a tighter stop loss than no stop loss at all, if you guys understand what I'm saying. Because if you don't have a stop loss, you're not going to be in this game a long time. And at one point, once you review your trades and you see why you're getting stopped at certain levels, you should adjust. You should adjust and accept different type of risk or different level of risk, but also adjust your reward. And a lot of you guys fail. And I started introducing the short long positions on the charts. And some of you, I was really happy to see CK execute a full trade. Seeing him should give you guys confidence that you can also do it. He had a plan and he literally let it go to the end and executed, and it's a beauty. And that's when you forget that it's about profits and losses. I don't know if I've ever told you it's, hey, go make $100 a day and that's your goal. Your goal is to change your mind and to become a trader. If you focus on the money, you're going to be in and out of this course like a butterfly. You're going to hop around looking for a magic strategy that gets you the Lambo. And guess what? By the time you're done with all the switching of the discords, you could have bought your Lambo. Instead, focus on the system and the process. and just, aim to become a better trader 1% than you were yesterday. And, that would equal about 33% on the year. And that would be much better for yourself than aiming for something tangible like money. If you think about this trading as an investment for a long run, 5-10 years from now, you would have the ability to make really significant amount of money. And I don't know what significant is to you, but let's say you can make enough money to live comfortably and buy the things that you want to buy, if that's what you're into, or travel the world if that's your thing, or the better yet, buy time. How many times have you hit a trade in 15 minutes and made, and even on Friday, we looked at NVIDIA contracts at I think they were 110. I think within 2 minutes they went to 2.6. Let's say you bought $1,000 worth, like 10 contracts, or in this case 9. You would have made $1,000 in 12 minutes. Where else can you do that? Nowhere. Where else can you make $200 in 10 minutes?
Not too many places.
Guys, you cannot. The first thing you should do is, if you follow on Twitter, Instagram, if you're younger, I'm not trying to control you. I'm just trying to give you education on your mindset. If you're following people that flash Lambos, trips, and then they're also doing that while they're on vacation, and you have 6,000 subs in your Discord, do you think he's making money off trading or the subs?
Subs.
I mean, think about it. 6,000 subs, and if they charge $200-300 a month, I mean, golly, I should do that too then. You have to learn to accept your own risk, guys. And I have a full slide on this particular slide that will go again into detail. If you have read Trading in a Zone, does anyone know the 5 fundamental truths in trading? Do you guys have it printed out? Do you understand it? If you read the book, you should have it. You should memorize it.
I do. I have to copy it. I mean, I have it written down, Shorty. I just haven't memorized it, but I have it written down. Yeah.
You guys
Yep.
should,
Yep.
remember these things, guys. And we just beat number 1 to death. Anything can happen. Market doesn't care what Shorty says or anything, right? Do I sometimes nail the levels or you guys nail the levels as well? Yeah, but whether that's luck or coincidence is to be debated. If you do it consistently over and over, I don't think you can call it luck. That means you understand the market and the behavior of it. Just imagine if you're a doctor and you go in and let's say you go to optometrist and Lewis is your doctor and he's like, yeah, man, it looks like you have eye cancer. You go to a second opinion, the guy's like, yeah, man, you just had a contact that was left in there. Two totally opposite extremes, right? One, you're scared for shit. The other one's like, oh man, just take the contact out, right? How many times you guys read Twitter and people you follow or anywhere, you read the news, one news station is saying hell's breaking loose, the war is over, this is coming in, new virus, and what happens to your mind? And what you had, your opinion and your understanding gets impacted by everything else. So market takes information and, we believe the market absorbs information real time and has the latest information and prices it correctly. Okay. There's a difference, what they say about the equilibrium of the market and how effective the market is. Is market always in equilibrium? This is, a philosophical question, but it's not.
No.
People say that it's always, because if market knows everything and price everything, then we would know it's an equilibrium. We would never have these different type of traders, time frame traders, right? We wouldn't have long-term, short-term. We would all be the same. Hence, the volume would always be the same. You would not have low liquidity, high liquidity areas. You would just go on forever. And we would not move much because we would be happy in equilibrium. Market is efficient at what it does, but it's not necessarily in equilibrium. How many times do I tell you guys don't predict but react? to a level?
All the time.
all the time.
9 times.
And many of you still suffer from it. And you know what happens when you do that? What do you guys think consequence is when you try to predict something and you're wrong? Think of
You
human mind. What do you do?
try to figure out a way to make yourself right.
Okay, here's my next question. Think of a trade when you're heavy position, way over your head in position. Position started going in your wrong way, and you went on Google to look for all the reasons why the trade will work. Let's say you shorted Apple, then you search for bad news on Apple. You're in a rabbit hole. Apple's iPhones, you start looking into battery lives, cases, you start going delusional. Has anyone ever done that?
Yeah.
I would say a lot of you guys did, but you have to find it. Where you're trying to justify your rational decision and not respecting stop loss, and then you're an egomaniac, and you basically say, "Hey, I'm gonna look for the reasons why this is gonna work," and the market's telling you, "No, it's not gonna work. I'm going the opposite way." The probability of you now losing is much higher than before. You know, me and Drew posted a few times. I'll probably add a slide here. A 50% loss on $100. You cannot gain it now if it goes 50% up. Just like those people that bought UPST at 330 and the stock is at $20. It's no longer a 200% increase from $20 to 320. It's a couple of touches. So when you guys ignore your stop losses and you start being an egomaniac on finding reasons why you should stay in a trade, that means you never had a plan. You don't respect the market, that it's random but yet efficient. That's when your trading will take a next step. And you will be like, okay, man, I really respect the probability of, market going up and I was short. I will close my position at this level and that's it. It beat me, not beat you. The statistic beat you on your setup. How many times did you guys see me risk $4 recently when I trade on futures with you guys live? And I take $20 on $4 risk. Did you guys see me do that a lot?
Yeah.
Yeah,
Do you guys ever ask yourself why?
psychologically.
Probabilities.
Well, because you want.
Okay, let me give you a different scenario. I risk $400,000 and I made $2 million. Would you take it?
Of course.
Yeah.
But if I risk 4 to make 20, is that different?
Yes.
Some people don't think that that's enough money.
But is the return on investment the same?
No, it's not the same. It's not the
Anyone
same,
else?
but in the long run, it will be.
$4 to 20 and 400 to 20 million. Is that 400,000, 20 million? Is that the same return on investment?
Yep.
Anyone else?
It is, yeah.
Drew, is it the same to you?
I believe the math works. I'm not sure.
It's about basically the percentage, right? The risk to reward percentage. Giving
Exactly.
4 to get 20. Yeah.
And I do these things to put it in your brain that it's okay to take those profits. I can't convert $4 to 1,000. There's no way. And I would not be willing to do that. But if I do 4 to 20 times,
It's called compounding.
now I make a lot of money, right? Now you're making, quite a bit of money. And if I keep the risk to reward, you guys see me, I'm looking for 3 to 1 all the time. How many times can I fail a trade if I risk $4 and I'm aiming for 20? How many times can I fail before I get one right? And be break even. Say it again.
A lot more than.
No, there's a number. What's the number?
5 times.
I can fail 5 times And the sixth time I get it right, I'm break even. So what does the number 1 say? The number 3 say here? If you have an edge and you flip a coin, let's say 10 times, you're most likely going to be right 5 times. And if I lost $20 on those 5 times, and I won $20 on those 5 times, I just made $80. Is that correct?
Yeah.
But you guys want to think about your ego stuff and your wins and losses and wrong or right, which is not what the market's talking to you about. You have to get the fuck out of that wrong, right, win or lose. You have to get that out of your head. It's about probabilities, and you're trading probabilities and setups. That leads to number 4, which is right on. If you know 80% works 80% of the time, well, if you're patient enough, you can catch 80% and win 80% of the time. So if you do the same setup of $4.20 over and over, what are the probabilities long term that you're going to be profitable? They're very high. So I would suggest that some of you guys think about this, print this out. And a lot of these points, you want to find yourself and where you make mistakes. In the book, of course, he explains it a lot more detail, but I just put this directly from the book for people that are lazy and not willing to put time in to read it. And if you read it once, you didn't read it yet. If you read it once, you just put a check mark on your learning. Once you read it a couple of times, that's when you're focused on learning. There's a person in this Discord that reads every book, every chapter, at least twice when he's reading a book. And when I started, I actually did like a mentorship with him. I was impressed. I was like, well, this would be probably the easiest one I've ever done. He struggled at first a little bit, and then, you know, he came back on track and focused, and now he's doing pretty well. He's making money over and over. You know, he's able to invest money, help his parents, whatever the goal is that he has. But he's focused on what he's supposed to do. If you're just doing this to tell me when Shorty asks, hey, did you read Trading in Zone? Yes. I can tell who read it, understands it, and who read it just to check mark. Just like you guys when you're in college, right? I don't know how far back, but let's say 20 years back, teacher tells you, hey, read chapter 1. Well, you read it, but if you're to be asked about it in any question, most likely you would not know the answer to speak about it. Because you were not focused, you did not take notes. You were not there. You were not present in the moment. You were thinking about something else. So if you're going to do trading and if you're going to be focused on it, you have to get into the zone of not letting out of the zone. Meaning you got to be focused on trading itself. When you're looking at a chart, you know, I had a one-on-one yesterday with somebody, and I'm explaining stuff and I can see the focus is there. When I do one-on-ones, when I'm explaining stuff and you ask me the same questions, I know your focus is elsewhere. I don't have a magic ball to give you where it's going to become profitable. But if you're putting in work and you're listening and you're applying that, and of course, I will check back in the next sessions to see if you're learning, then I'll know, hey, you're not lapsing over. You're not, you know, a boom bust trader. You're learning from your mistakes and you're adjusting. And a lot of you guys just, there's a quote coming up that's one of my favorite right after the next one. A lot of you guys just win a few trades and you know what happens? You call yourself a professional trader. You win 5-6 trades and then you're like, man, the world's mine. Let me go all in on the next play because I know it's going to work. I got 5 right. I'm on a hot streak. And what do you think happens on the 6th one?
You lose it all.
Oversized position and you lose.
You oversize your position, and let's say you built up your account from 1K to, and I had a guy in our Discord that did it. I'll call him Fins. From 1K, he grew it to 3,500 after our first one-on-one. He went away for about 2 weeks, 2-3 weeks due to work, and he comes back. He's like, man, I blew it. I said, I know. I knew you were gonna blow it. First of all, you have to change who you are when you trade. And your identity, I tell you this, your identity has to change, guys. If you want to be a professional trader, you have to take it fucking seriously. Like Dr. Luce in our Discord, do you think he just was like, fuck it, I'll become an optometrist, and overnight he became an optometrist? I don't think that's true. I think, becoming a doctor is a lot of it's constant learning, I would say. It's a learning for life. Things change, human bodies change, things evolve, you get viruses, whatever. He's constantly learning too, right? And for a lot of you guys, you come in and you're like, man, I want to be a doctor in trading. You don't first commit to it. I mean, how many books do you have to read to become a doctor?
Even
How
just
many?
undergrad was crazy.
I mean, how many tests do you have to take? How many, you have the practice, what do you call it, apprenticeship, like where you go work with another doctor to learn from it, actually hands-on. But yet you guys come in with some expectations that you're gonna be, hey man, 30 days, I pick up this volume profile and I become profitable. Oh no. You're gonna need to sweat a little bit more to do that. And you have to find something that clicks for you, and then you have to go elaborate in that strategy and let it click, and you build the foundation in it. Can Dr. Luz become a neurosurgeon right now? What are the odds of him becoming a neurosurgeon from optometrist? I would say fairly low. First, he's comfortable in a job that he does. He makes good money, obviously, as a doctor, I would say. Second, he has, something called time. When you're out of college, your 20s, and you have time to become a doctor, you put 7, 8 years on it. You're 28. Once you're 40, well, guess what? Time's getting a little bit against you, right? A person that became a neurosurgeon at 28 versus a person that became at 45. The guy that became at 27 had more experience to do surgeries on your brain. And he learned more live than, let's say Dr. Luce would. And it's same concept of trading. A lot of, I don't mind you guys doing, what's called paper trading. Your feelings will not be the same. Your feelings are going to be lying to you, unless you can somehow, and I don't know if you can, replicate the feelings of fake money to your real money and financial impact, then that's okay. You can do that. But in order to learn, you're gonna have to learn how to lose. You're gonna have to become a really good loser. You have to become a humble loser where you lose and you accept it. Say, thank you, market, for not taking more from me. But then the market gives you opportunity again that you take it from it. And that's where you even out. You don't even out by trying to control it by, adding 40,000 lines and fibs on your chart and telling me that it bounced here or there, or I told you so. I'm happy when I see you guys make money, and I'm equally sad when you guys lose money. But I'm more happy when you guys lose and you control your losses than when you lose and you're like, man, I doubled down. That's the one that aggravates me. It's like, why? Why did you do that? Okay, so I won't beat the slide more to death, but this is probably my favorite quote from the book. I would say, if anything, I've read the book multiple times. I always get stuck at this one, and I find myself, over a longer period of time trading, it will take long to delete win or lose, right or wrong. If you could kind of delete the hard drive of your memory and not ever have this, you would do pretty well. I told you guys that I had a game with the U6 team, if you want to call them a team. And they're playing surprisingly really well, right? I'm pretty strict when I coach soccer, and I tell the parents. Some parents don't like him; they're welcome to leave. But some parents love it, because most kids nowadays, I don't know in your world, but they don't get enough discipline. And I'm not talking about physical discipline. There's things that you have to do if you want to play soccer. There's things you have to do, and I define them, right? And you guys come in. This is where you put your book bags. And what do you think they do when they come? I don't even know where the book bags are. I don't know where their water bottles are. I don't know where their balls are. I don't think that half of the time they're on the right field. But lately, I've been doing this with the same team now for 12 months. They come in, they put the balls, they put the book bags in front of them, they put their water bottles with their names on, and there's discipline. What do you guys think it translates to on the game?
Playing their part.
It takes their part, guys. And it's the same thing I started off this, class with. Is the things you do over and over that help you add little by little. I honestly, in my team, and I know this is just, but I'm relating it to trading. I had 4 kids that I would never think they would be able to kick the ball, yet alone run with the ball or run into the space properly. And, Saturday, the parents came, they're like, dude, I've never seen them pass the ball around and use 6, and the other team just crying. The other team was literally crying. It was, 20 to something, and then I had to just let the other team score goals. The kids were really, really depressed. And what do you think half of my team did when they blew the whistle? They're like, Coach, we won. And I'm like, no, we didn't win. We played much better than they did. And of course, my son is like, yeah, we beat him. We beat him by 18 goals. And I'm like, no, we didn't beat him. Like, you have to tell him that you play better. You didn't beat anyone. You didn't win anything. And it starts at an early age that you have to kind of condition. It's like, can I change this in a kid where, parents might have a different concept of raising their kid or curriculum? Yeah, that's okay. And I don't mind it. But when you're on my soccer field, you're going to have different rules, and I'm going to have different expectations of you. And it's the same thing that I preach to you guys. I have different rules and expectations for you guys. Logging your trades, I think, is probably going to be the biggest game changer you have in trading. If you're not doing it, I guarantee you're not going to succeed. And you can probably get out of Discord and be miserable about it and go find one that gives you the place. It takes time, guys, to develop this. And once you get rid of the, hey, I won or I lost, I was wrong or right in the concept of trading, it becomes easier. And why do you guys think I add percentages to 80% rule, 88% IBH, IBL? These concepts are not new. Some people might call it differently. The initial balance, I gave you guys the book that it comes from. The 80% rule is not really a written down rule on volume areas, but it's a rule that actually, and if you guys, back test it, it works a lot. It works a lot more than it doesn't. So that's where, if you back test it, you'll get the 80% or close to it. But why do you guys think I give you these percentages? Do you guys think I just throw them out to make it fun?
No, you throw them out because you know they work.
No, I don't do that because I know they work. I do it to change your mindset. I do it so you think about them in terms of percentages, that you think about trading in terms of percentages and probabilities. If the 80% doesn't work out, what does it mean? It means the other 20% worked. The past 2 days, did the 88% rule work on IBH and IBL?
Yep.
Nope.
No, it did not. The 12% worked. Just on Friday, did the 80%? I mean, we went up, we closed 5-minute candles above it. And what did we do after that?
Broke IBU.
Yeah, we broke IBL and went down more. That means the 12% won. So it's not that I'm wrong. It's just the setup that I believe in and the edge that I have right, was against me, and 12% was stronger than the 88% in this case. And you just accept that and move on. Was I wrong? No. Was I right? No. Did the probability have better odds against me? Yes. And your mindset will start shifting and changing for your ability to become a better trader once you start thinking like this. But you have to find that edge for yourself, whether it's 80% rule, whether it's IBH, IBL, whether it's knowing volume profile and value areas, overlaps, upper lower side where we close on the POCs, those dependencies that we talk about in volume profile, those are the things that give you a better idea. And when I look at a picture, right, and I had a one-on-one, I gave somebody the idea of how it might work out on Monday, and we'll cover it. But based on probability that I'm seeing, hey, it's going to go this way most likely. And this is my pivot point for lower or higher. And I'm just playing that game. Okay. This is probably the last one that we'll cover it. Actually, one more after this and then we'll stop this. But I hope you're finding value. The only one that can change trading for yourself is who?
Yourself.
It's you
Yourself.
guys. I can preach this, talk this fucking all day until you sit down with yourself and really just you and yourself sit down and be like, what am I doing wrong? Look at the log. And that's why log is so important, because it's reflective of what you did. It's not reflective what you will do, but it's reflective what you did before, so you know how to change it. If you don't have something that you did bad, then you don't recollect it. What if every time you did something bad, you lost short-term memory and you don't remember doing it? What do you think will happen to that event?
But you keep doing it again.
You're just gonna keep doing it again, man. It's called insanity. But if you look at the log, and log is not just to log it, log is to reflect it. And some of you that we do 101s, I ask you guys to, in a Word document, take a chart, put it down, express your feelings. Because a lot of you guys, and even myself in this crazy fast-paced life, you don't remember a lot of events that happen. You guys have no idea what you did same thing last year at the same time, same day. But let's say you had a grandkid that was born on that day. Well, the feeling of love would be there, different type of feelings, and most likely you would remember it. And same with trading, right? Once you start reflecting, hey, I remember this 40-16 level and I know what I did wrong. I was trying to go long and predict, and it slapped me really hard and it dropped another 160 points from it. You can express feelings in trading as well, right? There's different type of feelings you can express, and then so as long as you put them down and you note the chart and you notice the pattern where you made a mistake and what you didn't look at, or what you did look at but overlooked, then it becomes easier. But it's probabilities. It's not really you right or wrong. You're mostly right and you're mostly wrong until you get the edge. So I wouldn't put that word. I would try to delete that word out of your trading, out of your typing, out of everything. Win or lose, right or wrong. You just say my probability of my setup worked, or probability of my setup did not work.
Makes sense.
And you will see rather good difference. And this one, I was gonna frame this one as a Dumpsty quote, but I didn't. I would say if I was to put down Dumpsty from my perspective, what's his problem? It's this. How many times do you guys think Kobe Bryant, when he was a last minute shot, he thought about failing when he takes a shot?
Not many. Probably none.
But why do you guys think that happens?
He's confident
Well, how do you gain confidence?
by
I
practicing.
failed.
Someone
Did
And
anyone
failing.
read the Kobe book?
No, but I would imagine he failed quite a few times and practice and failed, and trial and error.
Yeah. You know what was his model for being better than others? Does anyone read anything about him?
No.
He figured if he wakes up at 4 a.m. before they come to a regular practice at 8 a.m., that he would have 4 hours of extra practice times 7 days. He will have 28 hours a week times 52. Do you get the number?
That's the edge.
So what do you think that helped him? I mean, think about it. He would gain 1,500 hours of practice on an average player. Do you think he thought about fear when he did that?
There's an old quote, Baster has failed more times than an amateur has tried.
Pretty much. It works every time. And that's the same thing in trading. While you guys are trading and the setup is there, you're thinking about losing money. Instead, if the setup is there and you're confident and the edge is there and your probability is there, you go on that way. I would say on Friday when I went long, I would say how many shorts got killed on that play? We dipped below 38.50. Where did we bounce? I mean, it was to a penny. Did we hit VPOC? Did you guys look at your charts? I guess you guys are looking at it now. TJ, did we hit VPOC?
Yeah.
38.45, 5?
Yes, I believe we did. Don't have my chart pulled up.
Or was that the run-up POC that we had at 380.45?
I think that was a VPOC. Pretty sure it's a VPOC from January. But I have to do that replay thing, so.
It's fine. The point is, if I know what I know and what I believe in terms of setups, you know, if there was a major run-up from a point in time, and we'll look at it on charts, if they ran up from this level last time, and it's called volume accumulation setup that we have in the PowerPoint as well, we'll go over it. If they ran up there, and this is our first time visiting this spot, and we already dipped 4 points below it, you reclaimed it. What do you think I'm going to do 10 out of 10 times? I will go long.
Well, it was a January very area high, by the way. I mean low.
There, yeah, no, January value or low was 39.24. No, it's definitely a run up POC, I know. Okay. So don't, if you have the setup and you find the edge, there's no reason for you to be fearful of it. Just execute the trade where you think will go, put your stop loss, automate it. Or if you're not, just watch the chart, no feelings. Exit the trade if your stop loss is hit. Your edge did not have an edge, and you move on. And then you look for a next opportunity. But if you start chasing, oh my God, big candle, let me get in. I guarantee you're going to be wrong 9 out of 10 times if you buy the chasing FOMO candles.
Done it. Been there and done that. And
Most of you guys, I would say, do not understand the price action from candle to candle, whether you understand, you know, the caught of the candles, whether you understand the, you know, the delta, the absorptions of the candles. Do you understand the absorption on longer time frames? A lot of you guys don't understand that to be FOMOing too much. And I would avoid it at any price. You know, don't do that. Let the trades come to you. If you have the setups, play them. Enjoy retests of POCs, reclaimings, value area lows, highs, and you guys know that. Play that way and trust yourself that it's going to work because it worked before. And if it doesn't, that's okay. Okay. And I would say every single one of you experienced this. And a lot of you suffer with the last sentence or the last 3 words. Any disagreement?
No.
Nope.
No.
And then you guys, we want to have, and I give you guys my time and one-on-ones, but you guys don't ever change your behavior. Some of you guys go on the hot streaks, and then you're gone for a few. Let's say you step out on a vacation or school break, and then you start trading while you're not focused, and then you go red, and then you're like, Shorty, I need help. But prior to that, from our initial 101, you're green for 10 days. What does that tell you?
Not being focused.
You don't have the mindset of a trader. You did not accept it yet. Your identity is a trader. You have to believe in it. The question you should ask yourself, would a professional trader do what I'm doing now?
Yeah.
Would a professional trader chase 2 candles? Guarantee you no. Would a professional trader short the bottom of a long value on a value area low? I guarantee you no. That's not in the rules. It's the market's about, market's all about value. whether you want to accept it or not, whatever the fucking framework you use and whatever you call it, we trade based on value. If the value is too high, people are not going to buy it. You're going to have to auction lower to find the buyers. If the value is too low, you're going to eventually have to auction higher because you're not going to have supply there. And if there's no supply and you have a demand, your demand is stronger than supply, and anything you sell or buy, price is going to go higher. I gave you guys examples of PlayStation 5, and I was looking to buy my nephews some of them, and I couldn't find them. But I was not willing to pay $1,000 for it on eBay. So I just sat and waited for a moment. Opportunity came, time, price met. What do you guys think I did?
You bought it?
I bought all 6.
At a
instead
much lower price.
of paying 1,000 for one, I got 6, almost 30 something $100, 3,000 something. And everybody was happy. I was happy. They're happy. They're happy. They sold it. Nephews were super happy. So it's a win-win. Okay. But would I consider if I do that 5, 6 times, then the 7th time I blindly go by to the website? Probably not. I will still do my analysis to make sure that the price is right. If the market had accepted a new lower value for PS5, maybe because PS6 is coming, I most likely would not buy it. And that's understanding the value and having the mental ability to digest and hold my emotions from buying. Just like people with iPhone. I don't even know what number iPhone are we on now. Is it 15, 16?
I don't know, somewhere up there.
Okay. I mean, they're gonna go till they get into those Roman numerals, right? Where you're gonna have
20,
XX,
25, 30.
right? So the point is, humans are just sheep that will continue buying and following the trends of masses. Your job is not to do that as a trader. Your job is to have independent analysis that's independent from other people's opinion. Form it and see how it fits with the strategy and the edge that you have. If you won 5 times, and I always tell this, did anyone remember what I told Burnside Friday? He made really good money Friday. I don't know if Burnside's on or not.
I know what you told me.
Told him to size down.
I told him size down.
Yeah.
Monday, you trade 1/5 of what you took on Friday. Because there's no better feeling when you look at your month-end statement and you're like, hey man, I was, in some cases I was up $25,000, and you kept that $25,000. It's the money in your pocket.
Yeah.
If you
Listen,
made
let me log off.
If you made 29 days, you made money, and then the 30th day you decided to be an idiot and you went oversized, and that's the mental mistake. I would much rather keep $29,000 in my pocket than even trade the last day.
Oh God, yeah.
Same here.
But it doesn't matter if it's 29,000 or if it's 500. I tell you guys, when I trade futures, the mini accounts, you see me taking 30, 40, 50, 30, 40, I'm not doing this. I can live without trading the $500 account to now $2,000 account. I do it so you see it. I can take that money and I'm happy with it. I express my feelings a lot of times, and I don't know if you guys noticed, but I said, man, I just made $30 5 times.
Yep.
I don't do that to brag. Bragging $150 in other discords is nothing. They brag with Lambos. I don't brag with Lambos. I have a Forerunner, but I don't brag with the fucking Forerunner. I don't have a big house. I don't brag with that. I don't post pictures of it. But I brag with the small wins to get your mindset right.
And it's working.
If I can win 5 times 30, $150 a day times 5, not bad, $750 a week. For some of you, whether you're younger or if you're an older and you're looking for side income, I mean, 750 times 4, that's pretty good money.
That's really good money for me.
Think about it. If you can make $700 a week, and then let's say you open some LLCs, and I'm not going to get into your taxes or whatnot, but if you manage your money right, you could probably keep a lot of it. Right? And that's where you guys need to think full picture. A lot of you guys, you're putting a puzzle together and you're looking at everybody else to tell you where the next puzzle piece is going. You own the puzzle. If you lose a puzzle piece, now you can't put the puzzle together. If the puzzle had 30 pieces and you lost 29, the puzzle is broken. You're not going to be able to put that fucking puzzle back. You might know what it looks like and what it feels like, but in the real mindset, you're not going to be able to make money if you don't have the capital. So focus on preserving capital. What I mean by that, if you're up on a green day, you executed a trade that worked for you, get the fuck off. And Cuban is probably the best example of it. I love it when I hear, have a good day, guys. I'm done for the day, and I'm 9 days in a row green. How many times, Cuban, did you have 9 days in a row green before?
Not many.
And how does it feel?
It feels great. Something's changing. I'm changing my way of trading. I'm logging and things that I never did before. So this year is a different year. I said things had to be different. Something had to change within me. And I'm changing it and it's working. And I'm not bragging, man. I'm by far. And what my hopes is that to continue and to give others inspiration by doing this, that it can be done. If I can't grow an account to $1,000 from 100 and something, what makes me think that I'm going to grow it from 1,000 and something or 3,000 and something? It's not going to happen.
Yep. And you guys recall, I told him, once you grow it 1,000, I said, I'll double his account. I still stand by it. But it's my pleasure to see people when Cuban, and this is not just Cuban, when people come in and they accept the teachings as he did from Drew. Drew spent enormous amount of time with him.
Oh my God.
I've spent time with Cuban. Some others, TJ has spent time with Cuban.
Yes,
But the beauty of it is, it's not me. I put on a framework for all of you. I put it on, and I met with Drew. How many times, Drew, did me and you meet? I don't know if he's on or if he's working.
He had to take his kid to the MMA class, so he's actually not on right now.
He's told me, Shorty.
So me and Drew probably met guys. I don't know. At one point, my wife was like, "Are you cheating on me?" I'm like, "No, let me show you a picture of Drew." And he's like, "Okay, I believe you." Ugly guy with a really good heart. But I'm just picking on him. But he had the mindset, and he wanted to change his life. He wanted to change his kid's life, his wife. He wanted to have a better time, more time. And I mean, I built trust with him, and I gave him everything I got. And with some of you as well, I built some friendships with you guys, and I gave you everything I got. And a lot of them that took it, I promise if I named them, you would know the difference. You would be like, oh yeah, it makes sense. Because they're also, you know, if you want to get something, if somebody wants to give you something from their hand to your hand, what do you have to do with your hand?
Open it up.
You have to open
Extend
it up. You have
Yeah,
to extend it.
gratitude.
If I'm opening something to give you, you gotta fucking open your mind to get it. And you gotta tweak it and you gotta work on it and you gotta adjust for it. If you constantly ask me for one-on-ones and you're not changing shit, is it fair? Am I gonna say no? No, I'm not gonna say no until you really piss me off and you don't do anything. I'll just say fuck off. But if I see you're trying and you're really willing to put in the work, Cuban is honestly, I love Cuban. I love the way he's humble, he's respectful, and he goes about his ways. And there was a time when Cuban said that I'm thinking about quitting. I remember it.
Yes, it was, man.
And I told Sequence and Joe just make him up. He won a lifetime membership with Orbit, and that's how I went. And I wanted to see him grow where he can change his life, his family life. And slowly but surely you see him and he's more vocal, he puts more effort, he's charting, he's posting. He's giving back to a community of our traders. And I don't ask much from you guys. I just ask you, if you learn it, give it back. It's much better and a humble experience when you're teaching something in life and people are getting something out of it. I honestly don't have to do this for anyone. And I don't have to do it for myself, believe it or not. I can shut down the Discord. Will I miss the people? Yes, I would probably miss the interactions, the talking. I'll miss the one-on-ones. But will I miss anything else? No. A lot of you guys, TMI, but a lot of you guys are grandfathered in the original plan of $30 a month. So if you think I'm, making money out of this, I'm not. I don't do it to profit from anyone. How many people give you guys one-on-one for free in other Discord? Just go join a Discord. I pay your monthly fee and ask for the main guy to give you one-on-one. Have you guys ever had a one-on-one with somebody? With the experts?
No.
And
Well,
if you do, they're just giving you,
Well,
what
no,
they-
just go wander around. How much is an hour of their time? Go find one that brags. I don't follow them. Go find one that has it and be like, hey, I would like one-on-one for you for free.
Yeah.
Let me know their answers. Just do it and bring it back. You have to stop thinking everything about money. Start thinking process and systems with everything you do, especially trading. Okay? Did you guys have enough of psychology bullshit and mindset?
Thank you, man.
All right, let's
man.
go in. All right. How comfortable is there? Anyone uncomfortable with market auction and understanding the market, the purpose? Is anyone not on top of that? Do we need to go over this? Or are you guys okay? I'll ask every slide, and if there's somebody says no, we'll review it. I would assume a lot of you guys understand this. Not a lot of people teach market auction theory or know how to explain it. So if you don't understand it, that's okay. Raise your hand. Okay, I don't know if that thing that we are in is working with the raising hands, but TJ, if somebody's raising, let me know.
Oh, it is. It's good. Options has his hand up and he's been invited to speak, but hasn't accepted it. But other than that, everybody's just chilling.
Okay. I'll briefly touch some and then we'll move fast. Market is in balance or an imbalance, means it's accepted new value or rejecting new value. So usually you have, buyers, sellers, create balance. The longer the balance, the longer the volume. The longer the volume, the longer time you spent at a price. That means people are happier and happy to trade there. And believe it or not, the traders, the locals, as I call them, they're also going to be super heavy and happy because the more trades you take within the value area, the less hedging they have to do outside. The less hedging they do, the more capital they have, and they're not really wasting it. So therefore, the locals are happy when you're within the range. Okay, so I'm not going to go too much. Next slide. This is just a continuation of the slide here. We talked about this briefly, right? There are two auctions, right? When you see an active auction and it's, going up and down, we had that Friday. Remember, I said we're really in an active auction. We're not breaking the tops. We're coming there. We're going lower. So the auction is really active. Usually when you have a passive action, they will, pump the price to a level and literally go off of from there. It's already predetermined where they want to. Call this manipulation, but it's called a passive auction, right? Sometimes when you guys see us, let's say after hours earnings report, you see a spike of a stock. Let's say, I think Microsoft had one. I'm trying to recall the last one that I've seen. Anyways, let's say, Microsoft had it and it was trading 240 at close, pumps to 255. They already had an order there, and what happens is that they create an order above the price in order to trigger some other algorithms to kick in so they don't miss the action. And then basically they're like, yeah, do you want the price higher? And most of the time they will fill the gap in volume and balance and continue higher. But that auction is called passive. Okay, so they're most likely going to be predetermined levels and they go higher. Usually in the market open, if the price does not have a significant meaning, if we open and we just continue higher and we, let's say, continue lower, that's a really aggressive auction. And in those, I'll add something else from next slide, means the initial balance will not be important when we pop out of open and we just go one way. Do not care about initial balance in those moments. If we start up, then we bring it down, that's when the initial balance is going to have a role and it might be a rotation happening. When you're coming out and you're auctioning higher or strictly lower, initial balance will be a low meaning for it because they're already predetermined where they want to go. Does that make sense? You want to see an active auction and an initial balance to be set with the active auction. If it's passive, initial balance is not going to matter because they're going to slice through it. And a lot of people lose money on these type of days because they fight the trend. They're like, yeah, man, you hit the IBH now, but then they slice through it, right? And you see them slicing through it before 10:30. Okay. Just understand that there's different buyers and sellers, time frame buyers and sellers. What's good for me and you in terms of value might not be good for a long-term buyer and seller. I told you this last time, the long-term buyers and sellers do not cross paths very often. So if you think about the recent market development, right? We sold off from 4,200 to 3,850. Do you think there's a long-term seller at 3,850?
No.
Buy it.
No.
Would there be a long-term buyer sitting at 3,850?
Yeah.
Yes.
There's a high, I would say probabilities wise, I would say probably 51% chance that there's a long-term buyer at 3,850 than there's a seller. And what did I just create in my head and for the market on Monday? I created bias. My bias is that we're going to bounce from the 3,850 because there's going to be buyers sitting there. And there are some events that happened this past weekend, right? I mean, the bank, the SVB, right? They foreclosed, FDIC got involved. Right or wrong, I'm telling you from my kind of economic perspective and also monetary fiscal policies, if banks start failing and nobody's bailing them out, who'll bail them out? Let's say people, Warren
Players?
Buffett doesn't want to bail them out. Who do you think will bail them out?
The
If private-
taxpayers.
Exactly. And how do you think the feds will do this?
Raising taxes.
Little by little.
Well, your federal people, they can also
Bail
cut rates.
out.
If they cut the rates, they lower the cash reserves. For the bank, if they lower the cash reserve, how much money of their deposits have to go into Federal Reserve Bank? That means they would keep more cash and they will have money for withdrawals. That's how the bank works. Have you ever gone to a bank and they looked at you like you're fucking thief asking for your money, like $20,000, $30,000, and they're like, what the fuck are you doing?
I was
Yeah.
just watching a Facebook video of a guy who wanted $250,000 just for his podcast, and it took them 4 weeks. and he only got 180K. And he had the money.
Do you guys not think fundamentally something's fucking wrong there? Yeah. It's called fractional reserve banking. I'm not going to go into in this class. If you guys are interested, we can cover it. But banks make money out of thin air. And when they make money out of thin air too much, like SVB did, and a lot of these banks, then you got to ask yourself, how come those stress tests in June did not point this out on their balance sheets? No, just giving you something to think about, right? But now, when you come back to this topic of short-term long value, who wants to buy SVB stock here?
Maybe retail.
Nobody, considering it's going to be delisted soon.
Ah, there you go. So now, think about it. There's no interested parties to buy or sell. You can't really sell anything. And guess what? You can't withdraw money. And guess what? If you had more than 250K in your account, you're done. So all those
Not
long-term
insured.
buyers of those bank are screwed. All those long-term sellers of that are screwed because now they have the position that they can't sell to anyone. So the market auction is for every buyer, there's a seller. I can't sell one stock to two people. Okay. And it's the same like what's happening right now, right? You have to think about, probabilities and the long-term, short-term buyer. For me, 38.50 is a good level. It depends how, the market generates news more on this SVB. What I think happens that there comes a Warren Buffett typo guy and buys it 60 cents on the dollar, buys all the deposits, figures out how to fucking solve this issue that they had. If they can convince or have some upper hand on Fed rates or whatnot, manipulation, they lower the rates, cash reserves. The bank's able to, guarantee the withdrawals and deposits. What happens to the bank? Back to life. You guys remember what I mentioned about Warren Buffett and those cigarettes?
Mhm.
Does everybody else remember?
No.
So Warren Buffett said when he started his career, he looked for cigarettes on the floor, pretty much equivalent to businesses that had only had one more puff left in them. And he would look for companies that only had one more puff left in them to grow, and restructure the management, restructure the company, and let them grow back up.
Oh yeah, I
And-
remember.
And he would buy those companies and sell them at the better value because now he fixed the management. Once you fix management, I'm telling you from corporate world, if company's struggling, the best thing the company should do is from the board to get a decision to cut the whole C-level. Does that happen often in practice? No, because they're all buddies and friends and whatnot. But Warren Buffett, and being a really good discipline, contrarian and disciplined trader and investor, he did that. Same thing happened in 2009 with Bank of America. Bank of America was going to go under, and Merrill Lynch was going to go under. The government actually made a sweet deal with Warren Buffett, and Warren Buffett bailed out Bank of America. He also got profit from it, heavy profit from it. He got special dividends. He got preferred shares. And he makes $250 million every quarter from Bank of America now.
And he has no special attachment to any company he gets into, which allows him to make those decisions to gut it as necessary.
Exactly.
So brilliant.
And he's always a long-term buyer. Something happened with him 4 weeks ago that I said, do you guys remember when we looked at TSM stock and I said it's really at the high price for buying? Do you guys recall me saying that?
Yeah.
When it was at $90 and I said my ideal is 55-ish.
Yep.
And I said, I'm just not sure what, I looked at their balance sheet, I looked at their books, and I know there's a geopolitical, Taiwan and all of those. I just didn't make sense to me. And what did Warren Buffett do with TSM 2 weeks ago?
I believe he sold.
He sold all of it. Warren Buffett does not buy something and sell quickly. He buys and holds, collects dividends, or he persuades. If you don't have dividends, I guarantee you, with my life, you will have dividends soon. He comes in and it's like, hey, I'm gonna sell all your shares if you don't give me dividends. And the company's like, fuck, you own 25% of my shares. How are you gonna do that? He's like, yeah, just do it tomorrow. And what do you think the board has to do? They have to give dividends. It's not when, it's how soon you can do it. And people like himself are long-term people, and they're not gonna, they find value in stuff that's there, and it's about value. So they're not gonna really, buy shit that's half value and look to sell at half value. When they buy something, he bought Apple fairly cheap, and he, has a lot of shares and makes almost $800 million a year from it in dividends, not capital gains. So long-term buyers, sellers they don't cross paths too often. You and me, we trade with either short day people either trade with long-term buyers or long-term sellers. And if you're on the wrong side of that, that's when you lose money. Hopefully you guys can visualize that. That's pretty much what I just covered. And the anxiety levels and stress levels for us goes from active to passive. Anxiety level for long-time traders goes from passive to active. So, as the price comes to their level, and you guys, whoever uses Bookmap or whatever, I would say 80% of retail has no clue how to use Bookmap. People point out things that don't matter on those charts, and I look at it, and it's fairly funny to see it. You have to understand first, always ask yourself, what is other time frame person going to do at this level? Was 4,000 an important level? To retail, it was. Do you think a long-term buyer would buy heavy at 4,000 when we just got rejected at 4,000?
No.
At 4,200? Probably not. So as a long-term buyer, I need to find better value. I need to find that cigarette with the one more puff, and that 4,000 is not the last puff. If we lose 38.50, I would say 38.30, we lose that on Monday or Tuesday or this week, we go to straight down to 3,700, probably within 3 days or less. If the news stabilize with SVP, we run this to about 39.50, 60s potentially. I know 39.10 is going to be a key level. I understand where they can come in, where they can find value. I'm thinking in terms of them first and me second. Okay. This is the same thing. I keep reframing, retelling you. Think of long-term buyer sellers. They're not gonna be at the same level a lot, or rarely ever. Okay, it does not make sense. If I'm a long-term buyer, why would the long-term seller be selling so cheap? Because he was also a long-term buyer, probably at that level. You think they buy and hold to break even?
No.
No, they did not. Okay. We covered this. I think you guys know that price, time, volume. We care about this. I'll send you guys homework for today to create the volume profile in the value areas. Time, we talked about this. I'm not going to spend too much time. It regulates the opportunity, right? Just like we talked about Tesla, we had the opportunity to get in just on Friday. You had the opportunity for a short period of time. You had the opportunity to buy NVIDIA puts at 110 and they went to 250. Once they hit 250, that opportunity is gone. So time gives you opportunity. It's not just about 9:30 and 4 o'clock. Okay. Price, obviously, we care about the price. We care about the volume. Volume and price are key. Time is just the opportunity that you have to execute on the price and volume. Volume, we use volume profile, which we're going to go into details today, is volume at price. At what price do we have high or low volume? All right, there's meanings behind it. We'll cover that. Any questions on price?
No.
Just make sure you understand the bottom price, the bottom bullet, right? We talked about this. Just know that, when you see the aggressive and passive, there's usually, if you're new, there's no more buyers or sellers in the market. That scenario is never gonna happen. It's always the same equal buyers or sellers. It's just how aggressive they are. If they're aggressive, they're going to use the market, right? market orders, and if they're passive, they leave it on the liquidity. Their anxiety level goes from passive to active. So that's the difference. Okay. Is everybody familiar with the tape and reading diagonals, how the tape goes up, how the tape goes down in the auction? I gave you guys multiple examples in Discord on this. Do I need to go over this?
If you don't mind skimming over it for some of the people who might need a refresher.
All right, fair. So if you guys, let's look at the, on the left side. If I wanted the price to go from $100, and you always read the tape diagonally, right? You're never going to have this. You're always going to have this. If I want this price to go to 99, what will have to happen in this? Think about the auction for oranges. I'm telling you, oranges, 1 pound is $100, and there's 75 people selling oranges at $100, and there's 90 people selling oranges at $101. If I want to, let's say, lower the price, what would need to happen?
Selling?
In terms of this chart? Don't cheat. Don't look at the slide. Think of it as demand. If this person is willing to buy 50 oranges at $99, and you're able to fulfill that with this guy, well, and you don't have buyers bidding higher, that means this seller has to do what in the auction?
Put the price to 50 or 99, sorry.
So he has to come back to, fill the next order. This order would, these buyers would go away. So this guy has to consume the 50, and then he would have, let's say, nothing changes. He will have 25 to fulfill the next order at 98. And if somebody else from these guys like, oh shit, they're not really into oranges today, let me try selling at this price level before it goes up. But if the price drops too fast and it hits some orders where there's value, what do you think happens then? Then these guys, like here in this case at 95, there's a guy sitting and he's like, man, I'll buy these oranges at 95. Once that order comes in, this guy's going to get those oranges at that level, and they'll be fulfilled based on if their sellers willing to give it to them at that price. If there's an imbalance between these two, right? And I showed you guys this in Discord via Excel. If this was a low number, I think I might have it here. If you see an exhaustion like this, there's an imbalance between orders. You see that there's a little bit more aggression here on the demand side versus, the selling side. What do you think happens with this guy's getting 50? He wants 50 here. The spread is at 100. Well, this guy can't fulfill it. So this guy's just going to literally fly this price up to fulfill his orders at 50. And then there's a big guy's like, hey, man, I want 105 for these things. Well, once you get there, it's going to balance its market out based on the tape and what we're seeing. And you'd be like, okay, well, if you want to go over 108, you got to absorb all of these orders. And the same thing happens on the downside. If there was flipped, if this guy is selling, there's not much, to buy from. They're just going to be slicing until they get to the next level. And this is what they call level 2. Time and sales happens after the fact, and you can use the two to validate one and the other. Level 3 would give you a little bit more data, and you would see a little bit more ghost orders on the tape. And I don't use level 2, religiously. I'll take a look at it, see if there's any anomalies, and I don't keep it on at all times because it's just too much for my eyes to look at. I'd rather use volume profile, and I'll scan TPO and see what they're doing there in terms of single prints, and that's enough for me. But if you're in this type of thing, I can explain the tape more, but man, it will bother you for a long time, and you're gonna see Dr. Lewis soon. Does that make sense? At least how it works. Okay.
Yes,
And
thank you.
this is also explained if you read the Wyckoff 2.0 book. He explains it really, really well. Okay, I'm not going to go over this. You guys should know about this. This is volume profile. So volume profile is pretty much your volume at price. Instead of looking at the bars that are its regular volume, a bottom that tells you how much volume we had, At that time, this is telling you how much volume had at this price. And when you think about it, logically, if I can tell you that at $300 we had this much volume and the price went down from it, you can make some assumptions with that, right? And same thing could be the opposite, right? If you're building a shelf and we break through the shelf and then we're not going below the shelf, that means the accumulation was fairly bullish and we're going to go higher. And that's where we, have POCs, where we have high volume nodes, where we have low volume nodes, and that's what that is. I started introducing market profile for some of you guys. We haven't really gone even to like the basics of it. I think we should. I think some of you might benefit, but it's more to complement your trading. It's not, you could definitely use it for trading. It's a little bit more complex to understand because you guys will most likely be lost at first, just seeing the ABCs or 1-2s and understanding, the tails, the top tails, bottom tails, the balances, how it works out. And understanding, where it was initiative versus responsive, reactive buyers and sellers. That's where TPO market profile comes in. Volume profile has a similar concept. It's just that it uses different attributes to do that. Like we mentioned, the number of contracts at that level defines the length of that shelf on the volume profile. The more volume there is at that price, the higher the shelf, and the more contracts were traded and the more meaning it will have moving forward. Okay. Again, statistically speaking, we use as a normal volume area, we use 68% because of the bell curve. A lot of algorithms that are developed, they use bell curve, they use standard deviations because of statistics, right? So we use 68%. Unfortunately, you can't put that 68.2 in the value area, but a lot of people are programmed to put 70 because that's rounded up. I adjusted mine to 68 because it's much closer to 68.2. I added, the standard deviations of the Sigma 2 and Sigma 3 for you guys, and I explained that briefly last week. I think we in the class and the watch list how you can use it. Usually stocks, once they break the initial standard deviations, right, they have to return to the mean. And whether you're on 1 hour, 2 hours, you have to find what that mean is of that time frame that you're looking. And usually when you see a stock or something like, let's say, a futures going out of the initial, 68%, there's a high chance and a probability that you're going to be bouncing somewhere in between the second and the third standard deviation, which almost creates a cloud in stocks. And I showed you guys how we can do it, and we can cover it live on TradingView as well, so you guys can see it. But usually those things get respected really, really well. Because they're the extremes. That means, if you're in balance of 68%, what does that mean in terms of price, anyone? Are buyers happy or not happy? Is it fair value when you're trading in value?
Fair value.
Yes.
Yeah.
Yeah, it's called fair value. Once you pop out of the fair value and you go to 2, 3 sigma, that means it's no longer fair value. So what can you expect? Depending on what time frame you're on, what can you expect buyers or sellers to do when you deviate to a second or third sigma?
They're trying to find a new balance.
They're gonna
Go back.
They're gonna try to go back to the value that was fair, or they're gonna explore the next closest value below. The first instinct is always that you're gonna come back to the area where you went from. That's a normal behavior in a stock market. You will go to where you exploded from, you're gonna go back to it. And if you guys remember, the first slide that I put had the acceptance and the rejection. Do you guys recall that?
Yeah.
So now if you think about it, if this was our 68 here and we popped second standard deviation and you're coming back here, either you accept here or you dip below and you reject. I'm sorry, you either accept the new value here and you bounce. And if you're rejecting the new value, you're going to come back to the previously fair value and continue trading in there. So now hopefully you can connect the dots on why I'm doing that.
Or you're going to bounce off the value area high or low, right? And
That's correct. That will be the acceptance of the new value. If you're rejecting the 68%, that means you're leaving that area.
Yeah.
And if you're accepting to be outside of it, then you're going to go higher and you're going to look for new value area higher than the previous one. Okay, so that's value area high. If you're not familiar, right, some people call this value area high, some call it extreme high. So if they say VA extreme high, that means value area high. VA extreme low, that's value area low of that, whether it's a session or not, right? If you have a really wide balance or wide value area, that means there's a lot more traders that they're willing to participate in this range. Okay. If the value area is fairly tight, and we had some, 3 days ago, if you guys recall that, we dumped, then we opened, and I mentioned if we open here, we're going to be looking a little sideways, and it was the worst sideways days I've seen in a while. They, they open inside the VA, which means they opened inside the range, and they didn't really move much. And then came a big move, but we'll go over this particular scenario.
Usually comes a big move after that.
Hopefully you guys heard this before, and I don't know if you have or not, but there's a saying, especially if you've been trading for a while, never short a dull one. If you're not selling a dull tape, means that if we've been dumping or going higher, and now we're not really moving after that dump or that run up, you're not really making higher highs, but you're just consolidating. Well, if people were long at that level, they're most likely going to exit their longs because they're not appreciating the price fast enough. They're not auctioning price higher in their direction. So all those people close their longs. Same is true for sell, and that one's most famous for selling. Never sell a dull one. Meaning, if you had a market that was down and it's moving down, they're not going to want to stay in that position for long, because what the dealers do, if there's a low activity area, let's say in a P shape or in a lowercase b shape profile, you dumped and then you open the next day and you're just staying inside the value area, most of those guys will close their short, and they call it basically they go to the shop. And in New York, they say they go from the floor to the coffee shop, and they're not willing to trade or short at this level. So what do you think the market does? Well, if the dealer wants to initiate more activity, remember, dealers, locals make money when there's activity. If they want to initiate the activity, what do you think they have to do?
Let's find some buyers.
Well, they either have to find buyers or sellers. In this case, they can drive the price higher, right? Remember how the dealer collects inventory. He can, if he buys more inventory, he doesn't have to sell it, but he has to hedge it. He can leave that unhedged or a little bit while they bring back people from the coffee shop and be like, hey, are you willing to sell at this level? So they will drive the price up to drive the activity and bring those people back to interest to selling.
Yeah.
And they do that a lot, right? And I mentioned this, I believe it was Wednesday or Thursday. We'll take a look at it where it happened, right? I think I was live actually on one of the days where it happened. I was like, hey, there's a high chance you do not short this. They're not auctioning lower. And then we got the pop, I think it was like 20 points that they moved it higher because they were not willing to go lower at that level. They're not willing to sell at that level. Just like you saw on the tape, they had the price for sell higher. So now they had to drive those orders, the step ladder higher in order to get the sells fulfilled. It's just like me. I don't want to sell you, let's say, this course at $50. I'm going to have it at 100. I'm going to have to find buyers, or they're going to drive the buyers to get it to 100. It's the same concept in the market auction theory. So
Yeah,
instead
that
of
was
them,
on Thursday.
yeah. So it happens a lot. And when you see something at a support level, you don't want to be the last one to short, because you're going to be the first one to be smoked. Okay. Are you guys comfortable with these concepts we covered last time? A lot of you guys started calling it out in the Discord, and it feels good that you guys are noticing this. A lot of you guys before never noticed these things. So it's kind of really good for me to see you guys. We open outside VA, but inside range, right? You can open outside VA, but outside the range, which usually means a gap up in the market. And then you have, opening within PD value area low from the previous date. That means you're accepting this value area, right? And usually what I say within the PD value area low, if in the first initial balance, the 1 hour, you're not exploring outside of the VA, there's a high chance that you're accepting the previous day value area. And I think that's what happened, what Cuban is talking about. We had the acceptance of that area and we stayed in it for a longer period of time. And then eventually, once you agree that this value is no longer value, you're going to pop out of it.
Yeah. Kept up.
If number 4, if you open within PD value area low, and within an hour, we had an example of this, I think last week, you reject it within the first hour, that means you're not really content and happy, and you don't consider this value area to be fair. So you're going to be look to explore outside, price discovery outside. Okay. And last question, I think you guys, most of you should know the answer. Do you want price to chase value or value to chase price? And in which scenario do you want to chase? Oh, trade. You don't have to answer. Just think about it, and it'll make sense. Okay.
Sorry, what was the name of that book with the book that contains the IBL?
Mind over market.
Mind over. Okay, perfect.
Price to chase value, by the way.
Yep. If you guys look at this, I think if I was you guys, I'd print this slide out, right? I would frame it, and this can help you with your sentiment a lot, and with your bias being wrong a lot of times. And we've had this slide. I've just added a few more bullet points to it. If your stock opens above the value area and then it falls back inside the previous day value area, that means the market auction did not like the price in the new value, and that's signaling 80% rule. And same on the bottom, if the stock opens below the value and then it reclaims the value area, that's a bullish signal. That's 80% upside. And the third bullet is your continuation. That means the institutional people are there and they're going to continue in the way that we agreed on and from the open. Okay. I mentioned a lot of times when you look at session volume profiles, and if you see us, over a period of time, higher value areas, a high and the low is moving up and stacking like a pyramid, you're in a trend day. Usually when the VAs or value areas start overlapping on the top or bottom, it should give you a little bit of a caution on shorting or going long. You might have a spike or two there, right, just to test it. But that should give you a caution for long-term swings. Like you should know the trend is stalling and that there might be a little bit more overlap and they're going to be slowing down, potentially reversing. Okay. So, the fifth bullet from the top, when price moves away from an established value area to another price area, one of two things will occur. That's your first slide. The price will either be accepted as fair value or rejected, right? If the price moves away from what might be excess quickly, the marketplace basically is going to be like, hey, I'm accepting this. If it's rejected, the price is considered an excess, meaning there's too much and we're just going to move. The red bullets is what, I'm referencing to, what's happening right now, what happened 2 weeks ago when we hit the Jane value area low. What might not seem value to me and you might seem value to somebody else. And you have to think about that somebody else, right? Is there a chance that there was a high value add at 39.20? For them, it was, and they bounced it, whether it was a short cover rally on that Friday. Thursday was definitely better looking than a short cover rally of last 2 weeks ago than Friday. Therefore, you had one where some buyers, and then, the dealers used it as an opportunity to trigger a short cover rally, kill the puts, and then look, they dumped it. If you're moving out of the balances, right? Especially out of the weeklies, monthlies, it's not me and you that can move that balance and initiate the extension of the balances. It's usually the long-term people, big money's moving. That means institutional guys are involved. Okay. So if they see something like that, if you see it on a longer period, if you're breaking January value area low, that, it's not me and you and Cuban moving it, it's the big boys. And you want to be in there in trading with them, not against them. Okay, so this is the first scenario that we had where you're opening with the PD value and you're intercepting. So the market opens within PDA and the 1 hour balance, and we don't exploit, we don't break the balance of the first hour. Most likely you're going to accept that. That means you're going to most likely have a D shape or sideways. Means you're going to have a normal day. It's not going to be a trend day. The importance of this type of day is how you close. And what I mean by that, we have two types of close that you can have on a D shape, right? If the price closes above the previous day, if it closes above the POC on that day, then you're leaning a little bit more bullish, right? It's almost extended D shape to a bullish side, right? And same is true if you close below it, you're a little bit more bearish. That means the people were more bearish slightly on the day and protecting themselves, maybe preparing themselves for the downside. Okay. If you close within, right at POC, kind of like indecisive, you can expect the price the next day also to be indecisive unless you get a gap down up above the VA or not. But that in most scenarios, first hour, if you open within the PD value area, that's your acceptance of that value of the previous day. You short the tops, you buy the bottoms, take profits of 50%.
That would be a D shape.
That's exactly it. This is just the opposite of this one, right? So if you open with the VA and you're seeing a rejection, and we had this happen when we first introduced this, usually within the first hour, once the balance is set, right? If the auction comes out firing long or short from the get-go, from the open and not really up and down within the range, don't look for initial balance. But if you open with the VA and you're, auctioning actively inside the VA of the previous day, and then within 1 hour, you break that balance, it most likely means you're rejecting the previous day balance and you're most likely going to explore the price outside of it. So you're rejecting the previous day value area. Okay. And these type of days usually lead to good profits. At least they do for me. Okay. So that's kind of the example. I think this is the same one that we had. We opened with however we tested the bottom of VA, aggressive buying was there. So if you guys looked at this line right here, this was your PDVA right here, and look, you had a double tap there, and then of course they broke this one, they rejected it, came back, and boom, they broke the area, and they're looking for the price to be higher, right? You can definitely use, previous day POC in alignment with the current day POC to give you the sentiment as well. If you're not closing below the previous day POC, what's your sentiment? If no candles are closing below the POC of previous day, what's your sentiment?
Bullish.
You should be bullish. That means the accumulation is happening and they're potentially ready to go long and break that. Then your second confirmation, in this case, POC of the current session was, if you're looking at 2 days, was slightly higher. That means the majority of the volume happened at a higher price than the previous day, right? Because POC indicates highest volume traded. We know that a lot of action took at that price, and once you break it, high chance you're going to go higher. Then on the same chart, you notice the range high of the previous day was here, right? You see that it was there, and look, they broke that range with a nice big old candle, and then they gave you a little bit of a retest, and they continued higher. So in this case, they ran from a lowercase b shape, which is not normal, right? But it seems like they accumulated in that range between the two POCs, and they popped. So as a trader, you can, I don't have a day prior to this day to see the shelves, but you can use this to your advantage. If you see that we are stacking above the previous day POC, we're not closing candles below, your bias should be bullish. At least you could catch the run, to the value area high.
They call that a short cover rally.
This would be, short cover rally. Okay. Let's see. Opening outside VA, but within the range. Can everybody visualize this? It's fairly simple if you just think about the picture that it creates in terms of the lines. You're basically outside of the 68%, but still within the day's range, meaning PDH and PDL. Here, this means you're in imbalance because you broke outside of the VA. You're not accepting it, but you're not 100% sure yet, right? This one is, if I was, put this in my perspective of trading days, this one is tricky, right? It can become my favorite if you go outside of VA and then you quickly, within an hour or so, you start reclaiming that VA from the top or bottom, then I get really interested, right? I get interested because this can lead to 80% rules. But if you're opening outside the VA and then you continue higher, it's really hard to gauge that, to trade that in that trend. When you know you have PDH, let's say it's on the bullish side above, and you open outside the VA, you can play the bounces of the PD value area high, but it really has to match in terms of value areas, right? We want the the value areas of the previous day and the current day. We want the value areas to be, you know, either the current day is higher, but not lower. If you want to play the bounce, if that makes sense, you want them to be very close to each other. You don't want them to overlap on, you know, previous day value area high much higher than the current previous day value area high. It doesn't add a lot of conviction that the PD value area high is going to hold. We want the value areas to be in balance, and then the, you know, the acceptance of the new area is going to be higher. Does that make sense? Can you guys visualize that?
Yeah.
Okay. So that's this one here. Open outside VA, but within a range acceptance. So I think I just covered this. Okay, I think we covered this pretty much. Inside the range. So this is your acceptance here if you're opening outside, but inside the range. So you guys see we're outside the VA, but inside the range. The range is the bottom and the top here, and we open here, and you're pretty much staying inside this PD value area low. You open and you reclaim it and you're accepting it. If you're rejecting it, what would you expect to see here?
Rejecting out the POC and
Either POC or value area low of the previous day. You would not be able to get back in.
Then you're looking for new value.
Exactly. So this one is, you know, that's why it becomes tricky here. You reclaim the value area, and you know, you went, you know, from here, you open outside, you reclaimed it, right? And then you stayed inside, but you really did not make, you know, POC. You rejected it a few times and you stayed around the POC. You were never really close to executing the value area high 80% rule here. And sometimes when I say, you know, if you're POC and the value area high and low, sometimes you want to wait for one to clear, like POC, in order to execute that trade. It gives you a little bit more chance. Okay. Rejection. So we just kind of talked about that one for you guys. Try to visualize it. If you're trading this, I would say this is most likely an easier way to trade it. We want to see the PD value area high, what I talked about it. If they're aligned to the previous day, if the current value area and the value area high is aligned to PD value area high, higher chance that you're going to hold. But if they're not, if there's a mismatch and one is lower, current is lower than previous, there's a high chance that previous day range you'll fall back inside of it, and that gives you a little bit more idea that 80% might work or not. Okay. And if out of these days you're breaking the range, whether it's top or bottom, that increases the odds of a trend day. And you guys probably seen 2 or 3 of them last week. So are you guys familiar with these options? Can everybody visualize these 4?
Yeah.
Yeah.
If you can't and you're shy, you can message me. There's one more way we can show this, and I can explain it differently if you're confused. But this is important that you understand. And it's important that you understand, you know, how they're growing. Are they stacking higher? You know, what is the increase of the value area between them? If there's gaps between value areas, they tend to be, when the market reverses, you really fly through those areas, right? Those are the things that you want to start noticing on the market structure using volume profile. Okay. So let me go. Okay. So a lot of you guys, if you're new, there's a term called, you know, POC, which is the highest volume traded. Then there's something called, you know, don't confuse volume point of control with divergent POC. Divergent POC means that POC has not been tested. Okay. It's key to understand, because this virgin or naked POCs, they carry a lot more weight in terms of trading. There's a high probability that you're going to come back and retest these virgin POCs, especially if you have a few in a row. You know, I say if there's 4 or 5 epochs left behind, usually that's not a healthy run, and you're going to be filling them up really quickly. And I don't know how many times I've said this and how many times it worked out. It worked out on this run up too. You know, when you're growing, you need to build bases, right? You build a base and you pop out of the base. On a lot of these lately runs that we've had, it's almost like a V-shaped recovery. You hit a level and you take off 200 points.
Yeah.
And that's usually not a normal behavior in a stock market, because market likes to accumulate in value, and then needs to be an event that you drive out of the value. And it's called almost like the 3 stages, right? In Wyckoff, if you simplify it, you have the accumulation, then you have the markup, then you have another accumulation, and then you have the markdown. So you have a box where you accumulate, when you buy the inventory, then you mark up, you start selling the inventory, and then you basically sell the last bits of inventory at the top, and then you have the markdown. Then the clearance event happens and they sell off, and then people find new value. And you can find this on Google, Amazon, any chart right now on those big tech boys. You will have those stages. That's just a visual, of the bell curve and this. I don't think you guys are not familiar with this. I would, just make sure you understand the value areas of a session volume profile. Weekly has of course, value area, and those would be a bigger time frame buyers and sellers on a weekly. And then the monthly is also bigger. And, Macari last week was like, hey, but why do you trust weekly over the daily session? Well, weekly had 5 days worth of data, and there's different types of buyers and sellers at those levels. So if you're breaking a weekly value area low, I'm more inclined to short it based off that level than a daily value area low or whatever that might be that's on a closer level. So I always that's why I mark these levels, to know where the value is from the different type of buyers and sellers, and know where I can short and where I'm going bid the buyers or the sellers of that level. Does that make sense?
Yeah.
Okay. So using fixed volume profiles, there was one opportunity right before I logged off on in the midday. I think it was like 11:30ish on Friday, where I said, hey, I'm taking a short here. I'm just going to log off, and this is my target. And we hit that. I don't know. The level screwed up with me now with DS. I don't know what we hit. I think it was 39.30, or I don't know. Somewhere around there. There was a volume accumulation. We'll look at it. And we came right to it, and we sold off. And that was basically me using fixed volume profile. I looked for a balance where I circled, in this case, similar. I looked for it, and if I'm looking to short that, I will find a POC or a high volume shelf, high volume node, and I would basically be short from there as we revisit it. If you're looking for 1 minute volume, let's say balances where, price balance comes in, don't expect a lot more than what you're seeing on a smaller time frame. If you're trading 1 minute, then you got to be happy with quicker profits too. If you're trading 1 minute balance area, like let's say if this was 1 minute, you spend 10 minutes accumulating here, and you expect this accumulation to drive 300 points, then something is awfully wrong with your expectations. You want to know, these smaller accumulations will drive smaller bounces as well. Like this last run up from October wasn't initiated from 4,000 level. It was initiated from a lower level. 3850 was a big accumulation level from it, but it wasn't the reason why the whole thing happened. It's the second biggest reason why the run up happened is the 3850. 3700 is the first reason. Does that make sense? All these accumulations that you guys see throughout the day, you have to find, where did it start? What's the trigger for the whole thing? Like, in this case, this is a reaccumulation that I circled. And, from here, if they break it, they'll probably give a retest to it like they did here. You can short that, or find the POC. When they come up, you're probably going to get a reaction. You can play that to the closest node. Is everybody comfortable using? Most of you should be comfortable using fixed profile. We're basically zooming in to see where volume, what's happening at certain levels, and how's the volume at price at those levels, and where is the biggest shelf or smallest. Anyone confused on FVP?
Sometimes I can't figure out how to draw it. I don't know if it's maybe just me, but I still haven't really been good at that.
Okay, I'll cover it live in a few minutes. We'll go through the next period of slides quicker so you can get into live. So volume profile types, most of you should be comfortable. Fixed, visible, session. That's what we use day to day. And then you guys know we use PVP. A lot of you guys ask me for the settings. It's right here. So if you're going to ask me, go read the PowerPoint. Monthly use 4 hours, even though I've been testing lately with 2 hours. And I like the way it hits on 2 hours. I haven't committed yet to the change, but it's not a bad test. Take a look at on the monthly, right? There's no right or wrong way. Weekly, I use 1 hour, 65 minutes, and you can find those levels using that. I think we covered this. The only thing that we probably didn't cover is if you have a high volume nodes where they appear, and I'll show you guys that on live as well. High volume nodes. So those are, if you have something that, the built value as a high volume node, most likely that's going to be a fairly high volume, obviously, area, but it's going to be tough to break unless you get, some initiative buyers if it's going higher, or initiative sellers if it's going lower. You're not going to get that action to break easily. So usually you can use high volume nodes as a shorting or long point as a bounce. Okay, and low volume nodes are basically your, they are the low volume, which if there's a, let me ask this, if there's a high volume node, do you expect the volatility to be higher or lower?
Higher?
Anyone else?
A high volume node? Lower.
And if it's a low volume node, do you expect the volatility or ATR, average true range, to be higher or lower?
Higher.
Good, that's correct. So the reason why that, Sunflower, is if you're happy trading in a fair value area in a high volume node, you're going to have buyers and sellers facilitating a trade within a range, within a high volume area, and you're going to take a lot more to break that range. If you're in a low volume node, there's not much liquidity. You're just going to fly through it. So the potential of a true range being expanded in those areas is much higher because there's not a lot of volume to stop it. So make sure you understand this. Make sure everybody understand this.
That makes sense. I was thinking about it like the opposite way, I guess.
Yeah. Make sure you switch it in your head. It's important that you understand that. For instance, Kentucky Wildcat, he trades only low volume nodes, if you guys noticed. He highlights them and he literally is like a calculator. He just enters when it breaks that number and gets out when it touches the bottom of that number. And he's been doing that since he joined the Discord. Okay. So this is, let me see, what was the breakdown? So this is your initial balance in IBL that we're going to cover in this slide. I put it somehow before here. So you guys see here, initial balance is your 1 hour, right? And you want to mark these levels as IBH, IBL. I've seen people call these different things, back 50 years, 60 years ago. Even mine over Marquez guy, Stadelmeyer, he used this. So it's not a new concept. Was it a well-hidden concept for a long period of time? Yes. A lot of times, people use the opening range, which is 30 minutes, and along with the initial balance to create their bias. So it's nothing new. It's just how you trade it. I like to trade it in this simple form where you have the 1 hour. If I say 3 5-minute candles close, you can change this. The more candles you wait, the less risk you pick up. If you use 5-minute candles like I do, then if 5-minute candles close above the high, there's a 88% chance the low of the New York session was the low of the day. And how can you use this to your advantage? Well, if I know, in this case, that the low of the day was set right here, right, where we closed, let's say, above it, well, I can use any high volume nodes or such to go long off of, especially if you bring it back, to the bottom where we had the IBL where you're coming. I can place a trade there, especially if I see volume picking up, and put a stop loss right below IBL or low of the candle of the IBL and proceed. The second bullet, if does everybody understand 88%? It can also apply, of course, if you close below on a lower level, that means the high of the day is set. Everybody understand that?
Yeah.
Okay. If the initial balance is low, and I covered this before, if it's really narrow, there's a high probability that you're going to expand that balance and go up or down from there. If you go and look at, historically and look at the charts, usually when you identify really tight, at like an opening, there's a higher chance you're going to spill over. And we talked about this via the example of a lamp. If your lamp has a really, small base, somebody just touches it, it's probably going to tip over. Right. And same is true, if it's a wider balance on that lamp, you might have more ability to push and pull, and it won't tip over. So the wider the balance, the lower probability we're going to make a trend day and break out of it. And how do you find whether it's wide enough? Just look for the past week and see the points on ES or SPX, whatever you trade. See what was the balance set. And usually, if you use 7-day average of that, if you're breaking above it, and it's indicating a little bit something else. If you're opening below it, then you have a lower range, and you see how we do it in the first hour. Then the odds of breaking it. Okay, so if it's wide, I would anticipate that you're going to have a D-shaped volume profile. The last bullet, if the price opens above previous day value area and is formed higher than the P-day value area, you need to understand that this is a very bull sentiment. And it was also in one of those value tips and tricks. But now when you add IB into it, you're creating that new value with the initial balance. And you're creating it higher than a PD value area. So it's something to note, and it's true for opposite as well on the bear side. Any questions on IBH and IBL? There's a ton of examples you can go play with this, like different scenarios, different ways to play it. I usually grab, you guys have noticed me that I grab the volume profile from 9:30 onwards, and I also have a, session volume profile that starts at 6 p.m. from the current day. And like, for instance, tonight at 6 p.m., session volume profile is going to start. Well, I will start a new, FVP, fixed volume profile, from 9:30 onwards, because I want to see, a lot of times there's not enough volume between 6 p.m. and sometimes when we open the 9:30 New York session, there's not enough volume. So I'm only sometimes focused to see where's the POC of the real time versus the electronic hours or after hours, and I see how they compare, so I know how to trade it. Okay, this gets us into the volume profile. So I'll go through these just because some of you guys have not seen them. A lot of you guys are comfortable with this, and it's good to see. D-shaped volume profile. This is your basically a normal or a typical day. Sometimes your extended typical days can be almost like a D shape, but we'll have a skew. So if you have a positive skew, right, it means that you're going to be closing a little bit more on the upper side. A negative skew means you're closing down a little bit more on the downside below the POC. So you can have a little bit of a bullish and a bearish sentiment in D shape, knowing where you closed at the end of the day. If you closed above the POC and let's say above the value area high of that day, that means the buyers were a little bit more bullish, setting up for a run upwards. Same is true for downwards. You have to be able to distinguish between a D shape and a sideways. A D shape usually have a really, a typical day has a wide balance, and then we stay in the balance and you're in a typical day. A sideways, you have a really tight balance and you never breach that. And we had that happen, I believe, last week or a week before. It was truly a sideways day and not worth trading. And the best thing I do is I log off and I don't trade. Okay. You can skip a day of trading if the conditions are not met to trade it. And that's why we use these volume profile shapes to tell us. I just cover this. If you have, a typical day, most buyers and sellers will be present. So you're not going to have a lot of initiative buyers and sellers, because meanings you're just trading the range. If you're shorting the tops, right, it's not a bad idea to find the POC. POC should match the 50% of that range, high and low. So you would just be basically shorting the top, trimming at 50%, because you can definitely get a bounce. Doesn't mean you're going to go through it. Trim there, you break the POC, you can short to the bottom of it, and then buy the bottom, go to the POC. Basically ping pong between value area high, POC, value area low, and you can do that all day. And you do this till it no longer works. And you will have a losing trade. That's why it's important that you have a stop loss and the risk management. Because if you hit 5, that one that you lose should not wipe out the profits of the 5. That makes sense. Is that everybody comfortable identifying these?
Yeah.
Okay.
Yeah.
P-shaped, usually you want to see this in an uptrend. If the market's falling down and you see a P shape, usually means that there's a short cover rally that's happening, right? A market should not just reverse like that. It needs to consolidate in a value area. So if you're falling down, you should see a little bit of overlap, and I'll show you guys some of this when we switch to trading view. You should see some longer periods of overlap before we spike up. And 3850 level is where we had a lot of value areas overlap, and we exploded from it. Whether it was the rates that caused it, the pivot points, thinking of Feds or whatnot, and lower CPI. There was something the market found interesting, and they thought the value should be higher, and they popped. When you see this, from the bottom with no accumulation, it's most likely a short cover rally. When you see this in a nice, if you go back 2021, if you see these in the trending days, where do you want to trade it? Well, if you finish, let's say today on this, tomorrow you want to look for these high volume nodes or the value area lows of these areas, like this one here, or a high volume node, whether it's this one or this one, dependent. Once you draw the line, see which one is nice, and you compare it how the price reacted to it. You want to be buying the retest of the high volume nodes on these. Even though you might be scared when it deviates from it, but usually you're going to get buyers on these high volume nodes to drive the price up. So if you think about it, I asked you guys this last time, what does it mean in terms of time and opportunity when you see a profile like this in a market profile scene? What does it relate to time? What do you think about when you see a profile like this? What does it mean in terms of time?
Going to be for that long.
Say it again.
I'd say it's not going to be for that long because it's extended out towards kind of away from that value, the balance that we were talking about with the. I'm blanking on the name of it. It's like the figure that you showed. I sound really dumb right now. It's the
B shape.
not the shape. It's like on the earlier slides when we were talking about that diagram that shows kind of like the further away you move from it, and it tends to turn back to the price.
The mean, the standard deviations, or?
Yes, I'm so sorry. The standard deviations, yes.
Yeah. Okay. So, and that's what this means in terms of market profile. You got to think about time. It tells you that they did not want to. The opportunity was found here, and they're able to drive the price quickly. Not spending a lot of time here, but they're spending a lot of time here reaccumulating for the next run up. That's what usually P shapes are, right? You want to be trading on. Well, I think I have a slide. You want to have the ability, a high volume node, and you see a high volume node here as well inside the value area. It doesn't mean it have to be outside. You're looking for the volume nodes all around the profile. If this is the POC, right, and a lot of volume happened there, not here, that means they're able to run up the price, and now you have a high volume node here. So if you come back, this would be a good one because it would be value area, right? And then if you see one inside and you come back, you can definitely go long. As you see here, they bounce from it. Okay,
Yes,
so this is a
you can
fairly
use-
easy one.
Sorry.
Go ahead.
You can use those as entry and exit levels.
That's correct. You want to play between, like this right here is called a low volume node. There's no volume, so if you're playing the bounce from here, you can put an exit right here somewhere and play it, right? And then when you dip back again, you can do the same thing till it no longer works. B shape, just kind of opposite, right? In the market profile world, this is called tail on the bottom, right? So you have a tail, if you think about it, on the bottom, and a body is on the top. This is tail on the top and body on the bottom. So if you see this in an uptrend, what do you guys think it would mean?
Reversal.
Yeah, it would most likely mean a reversal because, you know, people quickly rejected the price at the top and they reaccumulated, found value much lower than where you auctioned. So if they found value much lower than they auctioned, and we know that there is no value for buyers here, it usually means you're going to continue lower down. So if you see this in the uptrend, just know the market's telling you something. You should be well aware of it, right? If you see this, you know, if you're on a trending down and you're kind of still going down of this, then, you know, you want to trade the POCs or high volume nodes off this P shape, of this B shape on the downside. So in this case, you know, you had the value area was here, but you also had a node right here. If you guys look, this was a node, this POC, and you had another node here. If you're to just kind of draw this out, and you would see most of the time it will reject at those levels, and that's the ones you want to short. And usually if you're not comfortable, if you're in a B shape like this and the price closes above the 50%, you just want to be aware, you know, if you take this and you close above the 50%, that trend might not continue down. So just note that when you're looking at closing of the B shapes. If we close above the 50% on the B shape, high chance that we're not going to continue down. Okay. This is directly from the Dale trader volume profile. I really like this setup that he had on this example, so I copied it from it. So if you're trading B shape, it's literally the opposite of P shape, right? If you're looking for the clusters, right, high volume nodes, this is your high volume node. This would have been your POC. When you come up here, right, you popped and then you give another run here the next day. Look where we came back. This is your high volume node. You dropped, you came back, and that's your short. Your exit would be the POC, which would be this line right here, and you would kind of close that position there. Does that make sense?
Yep.
Okay.
Yep.
B-shaped, these are usually fairly easy days to trade if you can identify them quickly enough. If you see this, you will have almost like two shelves, one on the top, one on the bottom, and you'll have a low volume node in between. So usually once you break the low volume nodes, you know, you're going to go higher, and you see that there's one more here, almost not the best example of B-shape, but close enough. You had another accumulation here, and then they popped higher from here. I don't have the rest of it, but usually you're going to fly from one zone to another, and typically you should not break the top or the bottom of these ranges. So it would be something like that, right? If you're shorting this, depending on how we're looking at it from the day, if you're going here, there's multiple ways to play it. If you're shorting here, then you should know you should be closing somewhere around here. If this was a true, you know, low volume node, you could trim some here, get out here. If you see that they set up the value area just like they did here, and you grab this area, POC probably be somewhere around here, you can go long. But if you break that, that's your stop loss, right? Then once you reclaim it, then you can go along again to that level. Does that make sense?
Yes.
Okay. So that's B shape. I really like playing B shape just because I know the range, and I know where the low volume nodes are and how price can accelerate. And usually on SPX, those can lead to a couple of 100%, you know, increases when the price takes off in that zone. You guys probably see me, you know, that 4056 level that I talked about last week was a really nice big SR flip level. And if you compare that with volume profile, whether it's a high volume node or a POC, it becomes really, really important. And that's what 4056 was. It was a big level on volume profile level, because if you grabbed, I believe it was from September to current, the POC was right there, 4055, 75. And you had, you know, this flip at 4056. So that level became crucial. Like, it was such a big level that you'll see if I can draw back up on live that it was the level that dictated the down run that we are in now. So, and these levels, you know, flips happen. And basically, you just have to kind of use it as an art. You find the support, you see where we bounced from, like in this case. You had two bounces, then you break it. And, you know, most of the people, and I'm not most, was short this here, but I'd rather short here, and I know where to get out. So that's the difference in how I play it versus maybe momentum traders. Momentum traders might take the stab here. They catch a candle and they're happy, nothing wrong with it. I like to short the retests of these and find a really good stop loss above based on volume profile or whatnot, to not be stopped out. It gives you a little bit more probability that you're going to catch a nice entry. So this is just a resistance support becoming resistance scenario, and then you have a flip here where the resistance becomes support. Then usually if you're consolidating in such manner like you are here, the range of that consolidation will be the range where you're probably looking to trim the targets on your long. So if this was my resistance, this is my support, we broke, that was 10% here, my target would be 10% here. Does that make sense?
Yes.
Okay. On Monday, I believe, or Tuesday, I mentioned that you guys should switch to 10 to 15 minutes to look for candle formations of the pin bars. If some of you guys you call it whatever you want. I don't care what you call it. You want to call it hammers, whatever. I just like pin bar because it takes out any synonym fighters to tell me what's wrong with it. I call it pin bar. You call it whatever you want. So understanding how these candles are formed is fairly important, right? And when you see these candles, we added that in the study of the orbs, stopping volume becomes very, very important. And there's many ways to trade them, right? My favorite way to trade this, and I'll show you guys, is if you have a pin bar like this, shorting on the break of the low and putting stop loss slightly above or in correlation with volume profile somewhere around there is not a bad strategy to play. And then you will have levels take off high volume nodes below or higher on the long side. This can help you complement what you're doing. And I use this a lot. You guys will tell me, hey, look at the 321 3-minute candle. Tell me what you see. And sometimes I will catch really the bottoms of using it by looking at the volume and looking at the candle it's forming and the pressure it's adding on the volume side. So that's how I sometimes catch, like I think I caught a bottom the other way, I think it was Thursday, using the same concept. The volume was coming in, the body was getting smaller, it was right proportionally. It wasn't up to here in a small tail, it was a really long tail on the bottom like this. Volume picked up and I knew that was stopping volume. They dipped it, halfway through it, almost less than 50% and continued higher. So it's really good to use and understanding this. So this is your lower wick. In this case, this looks like a gravestone doji. But you see them, they open, they have selling pressure, they hit the low, and then, the sellers get exhausted and they push this back up and they close basically where they opened. So there was selling initiated, and then the buyers came back and kind of absorbed everything that was sold and put it back up to close. And that's how you get that candle, and that's how your right candle looks. So hopefully this you can translate to a candle. Okay. And I would say a lot of your volume is going to be, this liquidity area here is where the volume and they exchanged a lot, but this is where they close and they're happy to be in there. And here's the opposite, your upper wick. So you have the initial, they open, they have the buying pressure, then the buyers are exhausted. And, I think I've covered enough on the buyer exhaustion, how you can spot that with the volume bars. Then you have the selling pressure and then you close there and same, just opposite of this side. So you have the initial buying, you hit this exhaustion, you selling, and you have a gravestone doji. Or a hammer, whatever you prefer. Okay. Any questions on this? You guys should understand this when you look at it, so you know what it means. Okay. So here's one pin bar example. So you had a pin bar here, right? And you dumped from it. So this is what I was kind of talking about. If you guys look at this pin bar, most people would take a short here, momentum traders. Usually people grab the wick of this one and they will find 50 or 61.8% of that candle and put a stop loss above it. If you're really a little bit more risk averse, you can put it above it. But here's one where you dump and you're coming back to this level. What do you guys think would happen if I grabbed FVP here? Where do you guys think POC would be?
Bottom.
Say it again.
I think it would be at the bottom. POC.
No, if I just grabbed FVP here, Right here.
Oh, it would be right. Honestly, kind of right where you drew the line. I would say,
Yeah.
like the blue line.
This will be the level where you have a pin bar and then you have a confirmation of fixed volume profile, which we call volume setup, volume accumulation setup, and you'd be looking on the retest of it to short. Here you have a compression up, meaning they're creating liquidity to get to this point. Remember, they could not take it any lower, so the dual tape becomes, and then they have to drive it up to bring the guys from the Wall Street back from coffee shop to their trading desk so they can sell. And that's what happens. Okay. Using volume trade setup. So this is one of my obviously favorite setups is where you use fixed volume profile. You find the swing high to low, and then you can look for, the volume accumulation setups or nodes. I like to grab right before the dump. I like to grab that, accumulation to just find where did it accumulate from and what level. Once you hit that level, there's a high chance you're gonna reject. It does not mean that I cannot use high volume nodes below or above or whatever that case is to short. Okay. This setup is really for patience. Like you're gonna be sitting and waiting till it comes to you. That means trade's coming to you. You're not looking to chase it. And you want to trade this in the direction of a trend, right? So if we accumulated and we dumped, let's say like in this case, you grabbed FVP, you grabbed from here to the last candle. Your volume node should be somewhere here. You might have some here on the secret supply right here. But I'll be looking to short at this level because there was a lot of volume here. And these volume nodes might look weak if I grabbed from here to the last candle low here. I wouldn't necessarily grab this here when I'm shorting because it might skew, and it'll give you a profile here as well. It'll give you probably some POC or a high volume node, but I'm looking to short, so I don't need to include this. I'm interested to see where the imbalance was created here at what level. Does that make sense? I think sunflower, that's what I think you might struggle with, but we'll explain it in live. Okay, so we want to trade in direction of a trend. The longer the accumulation, right, the higher chance of a trend starting. And once it breaks, it's going to be a longer trend as well. Okay. 3 setups. So we have the value areas, which is the 80%. And then we just covered a little bit more advanced value area tactics on the 4 scenarios, right? So you have that, and this is skimming down, the setups that you can play with, and you don't have to play them all. You just have to find one that works for you, and you have to be able to recognize them and see the pattern, right? So if you're playing with the value areas, right, if you're rejecting or accepting an area, right? So if you're rejecting an area here, if this was my VA, the gray lines, you popped here inside, you stayed, you went below it, and then you pop outside, but you're failing again. And you pop inside here, inside the value area, that means you're rejecting the new value area, and this is your short opportunity. And what would this resemble? This setup here, what does this resemble? This most likely executes in an 80% rule because you went above it and you're coming back inside, and now you're probably going to fulfill the bottom of the value area going to the value area low. And this can, this is your, you always, in this scenario, you compare it day to day, a week to week, month to month, meaning prior month, prior week, prior day. Okay. So this is you rejecting the finding new value area. Most likely you're going to fill the bottom of it. This is you accepting the value area. Let's say this was your value area, and here you open, you pop, and then here is your opportunity to go long. This is your opportunity to go long and put a stop loss somewhere below because you're betting that this value area has been fair enough, and you're going to be looking for new value area to be created higher. Okay, same is true for bottom as it is on the top. So hopefully you guys can visualize that and open up your mind to accept it. Okay, so here's the other one where you drop below the value area low, and then once you regain it, you pop inside and regain it. Can you guys remember the screenshot for a moment? Can you guys see how this works? Can you guys take a screenshot of yourself of this in your head? Let me show you something. Okay, what does the second bullet say? Is that the same scenario that I just pictured there?
Yes.
Okay. Is the first scenario same as the first scenario that I gave you guys?
Yes.
Guys, this repeats a lot. I wouldn't put it here. If it doesn't, you open above, you come back inside, high chance you go to the low and explore the lower areas. Here's this one, you're accepting. Here's this one where you open below and you get back inside and you're accepting the value area to be back fair value. And most likely you're going to explore the high, the extreme high of it. Okay. So those are the scenarios directly from there. This is one that's been a long setup, and I still think this is important on this stock, Oxy, as of right now. We talked about this, right? So they accumulated for a long period of time. You know, Warren Buffett's in it. They popped. I actually got into the shares right at this level, and we also played swings at that time. But you popped from this level, you created an imbalance. But you know, this whole volume profile that we grabbed is pointing that a lot of action happened here. And if I know that this is my target, if I look at this volume profile, you know, there's multiple ways I can play it. I can use this here, this shelf here as one, because it sticks out. I can use this gap here, start as a stop loss, and then I can use this value area high here also as a target. So multiple ways to play it. But you know, from fixed volume profile, you grab the accumulations and you look for the retests, right? And you always want to be in the trend that you're playing. If you're in a trend up, you're coming back to the scene where you popped from. So it's a very good long, and you can catch nice, plays from it. Bearish example, and you guys know there's a specific A+ setup that I look for, whether it's bullish or bearish. And this was one of those that was bearish, and this was SPY. And if you guys look, the much change of SPY on these levels ever since October. Where did SPY struggle the most recently? Go back to your chart and see how it worked around 411, 412. It's going to be important again because this is a
Yeah,
major.
those are big, yeah. 411, 412, 412. Yeah.
Big levels, guys. So here I grabbed long time POC. I saw an accumulation here. You guys see it right here. I drew a POC and I'm like, damn it. I got stopped out, and I recall this play. I got stopped out and I'm like, okay, great. Then they went higher. They hit the 430. I recall that as well. Then this is my favorite setup. When you have this accumulation, major POC like we have here, you dip below this POC, you're most likely going to be good short here.
Yeah.
This is the A+ setups. This shows you failed to go higher, and now you're showing the weakness, and most likely you're going to short here and be successful. And what do you see them do? You know, they were not able to go above the value area high. Here was a little risky to short it. You could have, right, from the value area high, knowing that we popped inside, retest. But here was the best opportunity. And look, they drove that to value area low, which is what, 30, 40 points. So the retest of major levels like this play a key role.
We got the same level in ES 4012, 4013.
Yep, that was an important level. And even if you look now, I'll show you guys on 4056. It's also the reason why. 80% rule, I think most of you guys should be comfortable. This is a long unwritten rule that existed in the market for long periods of time with the volume profile traders. You compare previous day value areas, current day value areas, right? So the key is, and most professional traders and long, if you're really a volume profile traders, they would actually use longer periods. They would use 2 half-hour, 30-minute periods to see if we are going to execute the 80% because they want more probability. I like to use, if you've been using 5 minutes, you notice that I changed it because the market's been a little bit more volatile. That means I need a little bit more assurance it works. I suggest you start using 2 to 15-minute periods, either 2 or 3 periods on that. You can use 5 minute, but the higher chance of it failing too. So you cannot get mad, hey, this did not work. The rule is that you should wait at least 2 30 minutes. But if you're using 2, let's say, or 3 10 minutes or 2 15-minute periods, then your odds of successful 80% increase as well. Okay. So how does it work? Let's see, this is just explains the same thing, but make sure the area has been unexplored. Meaning, if I'll cover this on another scenario, if you have a volume area and we pop above it, like one of those scenarios, value areas where we open above PD value area, but below the range, those tend to play out 80% rules really well. If it falls back inside the value area, there's a higher chance that it's going to explore the bottom of it because it hasn't been there. If pre-market, right, they're dancing inside the value area, they're spending a lot of time in it, market has a memory and it knows it's been there. But if we gap up below the range above VA, and then it falls back inside the VA, those are the setups, that you want to look for in terms of 80%. And same is true for the bottom. Below value area low, but inside the range, then regain the value area, that sets up for a nice 80% rule. And it even becomes more bullish if you open below the VA and below the range and you regain the VA. Does that make sense? I'm correlating this slide to the one slide that had 4 options for you guys. This one here. Can you guys follow along or are you guys lost?
I'm following along. Okay.
Okay. So I'm just covering this. If you open outside the value area, but inside range, then you gain the value area, top or bottom. 80% rules can play out. If you open outside and outside the range, and then you fall inside the VA, that turns to be really the extreme and higher odds, right, than anything that you're going to fill out. Because, I mean, you gapped up above VA, gapped up above the range, and then you're falling inside. Most likely you're going to explore the bottom of it. Okay. Here, it's tough to look for 80% when you have something like this. It does happen, but it has lower odds. Okay. Let's see. We covered this. 80 rules. Is there anyone confused on 80 rules? Most of you guys should be quite familiar with it. I guess most of you are comfortable. Okay. This is just, a lot of you guys go on the settings. What do I use? This pretty much covers it on what I use. It doesn't mean you have to use it, but don't expect me to line up to your levels if you're not using similar scenarios. So if you say yours is different, most likely because some of the settings are different. For Thinkorswim, we also use volume profile. Volume profile in Thinkorswim uses different aggregation math. So you really cannot rely on it for intraday stuff at all. You can use it for, visible range, but intraday stuff, you definitely have to use the previous day for current day. You can never even look at a single shelf on TOS on a current day volume profile. It's just the math's totally different. This just covers a little bit of time frame and trader types that you guys might be. So I suggest that you read it. If you're a day trader, you care about the session volume profiles, right? You want to be considering the previous day to current scenarios. If you're more of a long-term trader, then weekly, monthly, and even custom, whether it's visible range volume profile where you're grabbing a range of a month or 2 months, or a fixed volume profile of the same time frame. You're looking for a longer period. Some of you guys that I worked with, you don't have time to be in front of the monitor. So that's where I suggest, right? If you see, for instance, remember AMD accumulated at that 55 range a long time ago, it's normal for a long-term buyer to have an order sitting at 55, and then once it hits, you buy it there. So that's, how most of you guys should think as well. You should not have a lot of fear when you're buying good companies at a good discount. So I suggest that you look at this slide and see where you fit. VPA, this is directly from me in a cooling book. We've covered this before. If you want to grow as a trader, you have to put some effort. You have to read some books and you have to understand the context inside of it. Some of the stuff that I like to use is, whether it's anomalies or validations, right? If the average volume in this chart is the red line and it's a high volume node, then I'll look for the candle to represent the widespread on the body of a candle. If this was a high volume node and we had, let's say we were dripping down and the volume had an upper, bottom wick and an upper body, that tells me it's a pin bar. Most likely stopping volume is going to stop we're absorbing the, the buyers here. So they're exhausted and we're going to go up. And that's how I use that in correlation to trading. And, if you read the Wyckoff's books or, the 2.0 or the original one, it's all about the effort and the result. So if you're giving a lot of effort, volume, the result should be similar. It should be a lot of wide body spread. If this was below average volume and it had a widespread candle, it most likely be treated as an anomaly. Not to say here, when you have a low volume and a low body, this is not an anomaly. A lot of you guys would get that wrong sometimes, but that's not an anomaly when you see this. You see a low spread, low candle, that means, participation is low. I don't think institutional guys are in it. So you're just normal behavior. Then, this is a single candle look. You can also go into the multiple candles where you want to see, I call this in my mind, it's like a T-Mobile signals, right? If you're seeing this, if let's say you're a T-Mobile guy, T-Mobile phone is showing 5 signals, but you keep dropping phone calls, something is wrong there, right? In this case, the volume is rising, the price is buying. So, it tells you the institutional buyers are involved. It's normal that when you see something like this, that eventually, it depends what time frame you're on, right? If you're on a 1 minute bar and you see something like extension, then you see the next volume bar as small ones or a couple of small ones, and we're now, let's say, breaking the top bottom of this candle, they're just reaccumulating for the next run up. If I was to see a big volume bar and a top wick bottom body, that would mean stopping volume on the top side, meaning the buyers are being absorbed here. They're exhausted and sellers are saying, hey, no more upside. We're going to sell from here. Does that make sense? But in this case, low volume, low body, higher, higher, higher. It's validating the run up and institutional guys are involved. Okay. Anomalies, this is the one that's just mentioned at first. So you have a small body on the volume, small volume below average, and you have a wide body candle. Effort and result, this is an anomaly, right? This, in my mind, the way I think about it is there's no long-term buyers in this case because it's up candle. Long-term buyers are not involved in this, or institutional buyers are not buying this. It's just driven by a rapid buying and selling and FOMO of the retail traders. Okay, so this is kind of like a warning sign for me when I see it. Same as a validation of uptrend. This is your validation of a downtrend. When you see rising volume in such a manner and the price is falling, it's good to notice this and know what is happening and how to react to it. If you see something like this followed by a pin bar again on the opposite direction, that means, stopping volume coming in, and you can usually buy that candle of stopping volume break high and enjoy the profits and take it off based on volume profile nodes. Okay. Standard deviations. So I've told you many times that you can use the standard deviations to trade, right? So there's different standard deviations templates that I use. This can be one of them where you're using Fib standard deviations and it changes how you trade and react. If I'm using just the 3 standards that I typically use, which is 50, 61.8, and 68.2, I like to buy between 61.8 and 68.2. If it's standard deviations, I have to give it a little bit more time. Then 61.8 and 78.6 becomes my zone for buying, not 50 and 61.8 or 68 and a 2. I give it a little bit more space so I can react to it. If you guys need help on fibs, I would think most of you guys are okay, but I think I did a class on fibs before. We can cover it again. I just put that there just so you guys can have it.
Shorty, I have a question.
Mm-hmm.
On these, it's just basically on TradingView, it's just basically changing the settings, right?
That's correct. And you would just change them to negative 1.5, 1, 2, or 1, negative 1, 2, 3. There will be the deviations from the mean.
Okay. Thank you.
Okay. And I think we covered this pretty well on the psychology. This is the last slide that we did not cover, and I think it would be a good closing one. A lot of you guys don't have rules defined where you guys trade off of those rules, and you don't like to respect rules because you haven't been in the stock market to know the stock market's not going to give you rules by itself. You have to come up with it on your own. You have to accept the risk. If you accept the risk, and even if the trade is not successful, I consider it successful. Meaning, if the probabilities did not go in my favor, but I respected the stop loss, to me, that's a success. If the risk is, not accepted, now we're on the right side of it and trade successful, you get a little bit of fake confidence, right? You're gonna get delusional. You're gonna get kind of like a hot hand, and you're gonna be carefree trading till you blow up your account, and then you're gonna be like, oh, I think I fixed it, and then you deposit more money, and then you do the same shit on the right till you lose that account, and then you're gonna lose another one till you really understand what it means to accept the risk. You accept the risk that's defined based on your rules, right? And you stay true to it by being a disciplined trader, and you respect those stop losses, and you treat those losses as success. And a lot of you guys where, you guys expect a lot from the market, whether it's movement of the stock market, the hopes, the expectations, you align your whole life what the market should do, and the market does not give a damn what you think it should do. It's really not the one to be at fault. It's really you, because market moves at random, and you got to respect it. As long as you have an edge, you have the ability to make money as long as you have a good risk reward setup. And you guys will a lot of times stay on this right side till you fully understand what this means. It's a zero-sum game, so in a lot of times market, is going to take the money away from you, but it will also give you plenty of opportunities to make money if you're content with how to trade it. Okay. You're the one that's driving, and you're the one responsible, right? And if you're, let's say, driving a Tesla and you get into an accident, a stupid person would say this full self-driving capability killed me. Well, I mean, you have the ability to control the car, to brake, to press gas, open windows, whatever the hell you want. It's really not the cars, it's just the capability it has. Doesn't mean you have to use it. And same with the stock market. It has a lot of ability to take money from you, but if you have proper risk management, proper risk reward, you have the ability to take money from it as well. Okay. And the market's purpose, guys, is just really to facilitate the trades. And you have people inside, like dealers, or some people call it market makers. They're there just they literally have to buy and sell whatever you're doing. So if you're willing to sell, they have to buy. If you're willing to buy, they have to sell. So think about them. They're just doing whatever you want them, and they provide liquidity. And if you start blaming at any point, the market, the people, it's really you that's problem, and the market doesn't owe you anything. Okay, so hopefully you guys can get something out of this, the volume profile session, and understand that if you're new at the beginning, we'll look at the volume profile now just on ES. I really don't even know which contract to kind of look at now because they're all screwed up. I think we have to go under ES, and we have to go under the 3. And this is the level that we had. So here's a longer picture, right? We won't have a lot of data here. This is what I was talking about earlier. If you guys recall, we had accumulation, major wide one here, right? This was our October lows, and then we had another accumulation right here. If you guys look. So what I did when I was finding that level of 38.50 is right here. And this is where we bounced, right? We held this level. We didn't really breach it yet. And it'll be interesting to see how we react to it, right? If I was to grab from here to here, this level right there was actually, I don't know. I had a lot of issues with TradingView this yesterday. I don't know what it was doing. It was not doing what it was supposed to do. So this level here was fairly important on the short side. We also had the value area high. here, and once we came back, we lost that. I mean, and I'm just looking from the swing low here to the current. I don't necessarily have to do that. I can go from here to here, look at this data like this way, and I can see again, you know, this even here, 4,000 level is coming up as an importance level, matching that 39.90, that a lot of volume is happening here. So, and if you're not making higher highs here, compared to this level, it's telling you that it might be a little bit of a selling distribution happening. So you can apply this, you know, fixed volume profile on any time frame, right? It happens pretty much everywhere. So if you guys look, for instance, let's see, in this area here, you had a nice little accumulation. If you go here and you look at this level, so 39.20 was a pretty good level for potential short. And look, they came back here, they lost it. All right, you can use many ways to find the targets, but it happens. Then you have another one that's overlapping kind of here, and then you had the pop from there. So let's see this one here that we had level from here to here, and you come here, and it's 38.93. The low of this is where they rejected that. So you're not going to get necessarily every time on smaller time frames. When it's usually tight like this, and I mentioned this before, you can use the whole area, value area, high and low, because it's fairly tight. I mean, 98 to 88, 10 points, and this being in the middle. You can use this whole area as a potential rejection. You can use this as a stop loss. Ideal entry is POC, but don't be afraid to take it here. And this happens, let me see, on SPY, if you're trading SPY here. It happens pretty much everywhere. So I'll just add something here. The sunflower, this is mainly just to help you understand how it works. So if you guys look at this on, let's say, 10 minutes, if you look at SPY here at the close, they accumulated here for quite a bit, right? And if you guys look, they came back right to it. They failed. They had a nice candle, right? You see the candle, and what I was talking about, these pin candles here. Usually, if you draw this line, this can be your entry. Your stop loss can be right at it, right here, which means, you know, you have a little bit of odds of getting stopped out on liquidity, or you could use, you know, something, if you had volume profile from, let's say here, you'd be able to know where the sellers are. So now I'm able to say, yes, there's a high chance they can tip this over, but I don't know about if I put my stop loss here, would they tip me over? It's all about your preference and how you want to do it. Some people, you know, sometimes I would trade, like if I look at this, I'll remove this for a second. I'll grab the 50% of that wick and I'll use that if I'm really like itching and not sure 100% on the setup. I can use that as my stop loss between the wick, and see, in this case that would have worked out pretty well. If I took that short, then I should know the market structure as well, higher highs and higher lows. I can target, you know, the opening low here as a low as well. So in this case, it would be this here. You'd be looking to take a trade, you know, probably somewhere around these candles would be a good spot to get out. And I think in this case, I think was this Friday. This was our initial balance low. This was the body low, I believe, of the candles. If you're using 10, it might be different on 1 minute. So here, this would be the low here on initial body low candle. This was our high here, and this is where a lot of people, I think, got thrown off because we broke the IPH. The 88% rule was broken, and it was also broken, I believe, to the downside, because this meant that high of the day was set. I'm sorry, the low of the day was set, but we sliced through it, and then we continued lower here, but then we came back and rejected the IB candle low. Okay, so you can use the opportunities to look for the retests. I mean, if you look, you know, pay attention to this one. If I was to grab FVP, I can grab from here to here, right? And here's my volume profile here. A lot of volume happened, even though you had this whole falling thing here. Look at this. If this was my entry on this one, what do I say my favorite setup is here? Does anyone see it in this scenario?
The retest.
Okay, so it's pretty much what we covered in the, you know, in the slides there. We dumped from here. You're gonna do this compression. Most likely you pop, you come back, and this is the one. This is the one that's you're looking to short, right? You can definitely short this one. You might have a little bit of a trap if you're using these high volume nodes here where you grab from, let's say this is your stop loss, then you know your scenario for short might be you're getting in here, and now you got to find where is it that you're going. So you have a, you know, in this case, this is my selling. I want to look at the buying side. If I look at this, well, fairly simple. If this is my short, where should I get out? Well, I know that they accumulated a lot of volume here. So now I look at the risk reward and what's wrong with this trade. Is there anything wrong here?
It's 3-2 and not 3-1.
Say it again.
3-2 says 3-1.
No, that's 3-1.
There's nothing wrong with
This
it.
is bigger than 3-1. This is 3.2 to 1.
Yeah, there's nothing wrong with that trade.
This is a really good trade. So from risk probability, your setup probability, your edge is telling you to short here. You have a really nice setup here for 3-1. You short here, you get out here. And I mean, honestly, you were never in danger on this trade, nor were you never negative on it. There was no drawdown on your account.
Looks good to me, yeah. I just thought there was something wrong.
No, I asked for a reason. What was wrong? To see if somebody would catch. So then same thing on the downside. If you guys look, if you accumulate here, is there nice candle overlaps? Yeah, there's nice candles. So I wouldn't grab this candle here. Meaning, I believe TJ, this is still true. If you grab this one, you're not grabbing it. You have to go one over, right, to grab it.
Yes, the last candle doesn't get included in it.
Correct. So now if you look at this sell-off, look at this. You accumulated here and you dropped here. I mean, at 351, look at this. You created an imbalance from this volume. This is the volume that caused this imbalance. And look at this. You came back, accumulated. And I mean, think about this. Here's your volume. I can draw this. Come on. Let me delete this. If I go to this candle here, did the volume shift? Did the POC shift?
No.
It did not shift. So if I look at this, I'm just going to remove this pink box so you guys can see the shelves. I mean, this one. Here's your shelves of this run up from here to here. I'm grabbing the consolidation to see where the level is that they accumulated. I see that there's a tiny little volume node here. Right? So there's one right there from this run up. And then I see that value area high of this run up is here. So from this run up to here, the volume area is here. 80%, I'm sorry, 68% is in this area. Everything beyond is there. So if I'm going long from here, right, what should I target for a stop loss and gain? Anyone? How would you play this? This is a really
Value
good
area low stop loss, value area high gain.
Yeah, very easy play, guys. This is fairly simple. If you do this and you do this, and look at this 2-4 to 1, could you manage this to be 3-1? I would say yes. You know, if you look at the distribution around this volume, I would say this would be my way of how I would play it. I would grab equal highs and lows around POC, and this would be somewhere around here. And maybe I would be stopped out in here, but I would definitely take this on another retest here that it gives you. If you guys look here, it does give it to you. And remember, I'm on 1 minute candle, so you cannot expect perfection. If I come here, look what they did here. Did they do that? They did it, right? So if you look at the point, they came, they popped, they came back, they got the shorts, you know, the longs scared, and then they proceeded without them and they hit the target. It happens on literally all the time frames. So that's how you can use FVP, right? Does that make sense, Sunflower?
Yeah, it does. I just have to play around with it because sometimes when I try to use it, it doesn't make that line. I get confused.
All right, well, fair enough. So now just the market structure, right? So kind of prep for the levels for upcoming week. So we know that this is our value area high, right? That we are in. We'll mark that. And then sometimes I need better levels. This should be in a half.
Oh, I remembered a question that I wanted to ask. What is the scenario when you do like the consolidation for the smaller, and then you go and do the longer, like swing high to swing low, or vice versa? Is that just to find where like the nodes are? That's sometimes where I get a little bit lost.
That's correct. I mean, I'll look for the nodes and I'll show you that right now. Let me just finish this one and I'll show you. So if you look at this, let's say on 3 days, and on a longer picture, right? This is 3 day per candle. I'm looking to see where we kind of accumulated. So I see we accumulated here and I see accumulated here. I'm finding to see where the accumulations happened within that area. So if I was to grab, you know, what we had here earlier, so we had 38.59 using the 3 days. And then here we also kind of, I would say, accumulated right at the level of, let's say, 36.60. I'm not using proper sizing, but somewhere in this area, a lot of volume was dispersed, right? So if I was to go on 4 hours time frame, I'll be able to see it a little bit cleaner here. So here's my volume accumulation here. And this is where the price most likely will come back. Let's say 3,700, draw it around about 3,700 even, 15 up and down. So I know at this level, major accumulation on higher time frames happened. In between, you're going to have these micro accumulations and tests that they do. So I'm able to use knowing where the long-term buyers are most likely going to be, and it's going to be somewhere around here. They're going to be sitting there, just like I knew that they're going to be sitting in this level right here. This level is fairly important, and they bounced it right off of it. So if I go here and I look at it, now I know there's a high chance that they're going to respect that level, and that's what they did. They came back with the pin bar in 10 minutes, and they bounced it, you know, how many points? Like 20 something, 37 points from that level. So it's important that I know that so I don't short this. A lot of people that once we broke 38.50, all the retail was short. But there was long-term buyers here, so I was actually not short here. I was long here. I was looking to drive it up higher. And that's the difference, knowing on a higher accumulation zones where the buyers are and higher, you know, accumulations of selling points or consolidations on the tops to know where the sellers are. So that way you don't play against them, you play with them. Was this a high risk trade? Yeah, but it was a high reward as well. You know, if I entered here, my stop was below and I was able to catch nice points and get out. And it was not really hard to figure out where they're going to reject, in my opinion, here.
That makes sense. Thank you.
Okay, so now that we have this, right, the sentiment's a little bit bearish, right? I would say the POC, we closed, you know, we closed below it here on the day. We're inside here, right? So you're below the, you know, here you went above the PDL and you got rejected. So now the PDL is here, right? Previous day low is, I would mark this right here. So this is our PDL. This is gonna be our PD. Oh, that's not good. And this is our PDH. So if I know these two things, I'll be able to know how we can play it. And then especially since Sunday might give us a gap, whether it's up or down, we'll watch for that gap. If they are to gap down, they would gap below this level. I don't think they gap much higher like than PDH. I doubt that that would happen. So initial is if we open, you know, between this range tomorrow here, it's a positive sign for the bulls that they're accepting this value area here. Because obviously we just found that they found a lot of value here previously, meaning they were trading inside this level here and here for a long period of time. You guys see that? So here they're happy before. There's no reason for them not to be happy at it again. And then the next steps I would do, I would look at, you know, the 65 minutes. I would look at the PVP. I will make sure that this 1 week is pointing certain things that I'm seeing.
You may also want to add it to extended trade hours.
Yeah, that'd be a good idea. Does it shift? This is our weekly. So if you look at the weekly here and just look at the profiles. If we just look here for some time, you asked me about the overlapping, you know, value areas. We said, you know, if you're running an uptrend, you see how they accumulated here for some time at this 38.50 for 3 weeks, they were here. Then they popped it, right? And then this next value area here is overpowering and much increased buyers, sellers. Then they started inching up higher on the value area highs, and value area lows made higher highs or higher lows in this case. And then they came back on a massive value area at the top, and then inside. And then once you lost this level here, I would say based on this weekly profile, this is, hell broke loose. So you had inside value areas and shifting down, overlapping to the lower side. Once you broke this, that means you're going to be looking for next value areas, which is probably around this area, 410. Then you had this one right here, which you also bounced right here. You had a nice bounce, which was 39.24 January. And most likely you're coming back to fulfill this to see if the buyers are going to hold. And so far they held. If you're to lose this 38.24, I would say high chance you're going to be going to at least this level here. Okay. You will have some support here. What is this? 3800s. Can't ignore it, but most likely your intentions will be to go 3700. So right now you see this week opened, we opened inside the VA and inside the range here. We dipped a little bit below, but we brought it back inside. Then you went above this VA here, VA high, we came back inside, and then the wide balance here. So I would not be shocked to see a week where we consolidate. And I think we have CPI Tuesday. Yeah, so I think tomorrow could be a really, really tight consolidation where we get back inside this area here. And I don't think you break the PDH. It might be all like 30-point range tomorrow in between here and here. You reclaim this area, you try the little short cover rally, scare the bears, and you stay here in this range. And I know now, this level is going to be fairly important because it is what? It's a Virgin POC on the weekly. And then this one here.
Previous week POC.
Oh, I didn't mean to do that. And you see here, there's two levels kind of matching here right now. You have PD value area I'm sorry, high, and then you have the previous week value area low here. So it's going to be an interesting level to break for them. So let's see, I'll put this one on top, this one on the bottom so I can see them. But you see that they're really, really close by. So once you're able to break this, regain it, that would mean that we're accepting potentially the area here. And I would not be shocked if we are able to run this somewhere in between here, like all day, in between PDH and this level for the remaining of Monday and close inside of this level. If you're able to break this level, then there's a high chance. Just look at the volume profile. Between here and here, there's tiny little volume node, but this is the majority of the volume node here. That's why it's extended to the downside. Once you break this level, I would say high chance you go 60 points to the weekly POC. And then that would enable you for the retest of 80% rule on a weekly, which would look like this, right? And maybe you do this and then go there. Does that make sense? But this would be a scenario in my head, the way I play it. I could play the long on retest, drive it 39.30, which would be what? About 40 points here potentially. If you reclaim this level, I'd go along there. Reclaim that one, go there. You lose it, show weakness, then you short it. This becomes a shorting level all the way down to the value area low, which is another, 40 points? A little bit more actually, sorry. About 100 points. Does that make sense?
Yeah, I'm definitely going to be looking tonight, and probably going to try to trade tonight a little later as well if I have some time.
Yep. So I would look at this, and tomorrow I expect a range day. I don't expect any trend days tomorrow unless we have major news tomorrow. So there's nothing tomorrow. Consumer inflation expectations, is this not a report, or I have to see what is this? Okay, well, it's not CPI tomorrow. I don't think it's on Mondays. Looks like core inflation year over year, CPI is here. So let's see what they do tomorrow. I'm not sure what they're going to report, but I would expect a range day tomorrow. We should not be breaking above this or below this. It depends where we open. But based on this, I'll be able to post my levels in the morning and a game plan of what we're gonna do.
Well, CK just posted emergency Fed meeting tomorrow, probably due to the SVB issue.
So that's what I expected. I mean, some people said there's no Fed rate cuts. They could announce. I don't know if I mentioned this earlier or if I did not, but they could announce emergency rate cuts. Like they need to lower the cash reserves on the Fed, which would alleviate the pain for the bank. That would give people.
It also alleviates the recession fears that are now currently going through everybody for the weekend.
And think about it. How come, I mentioned this before, how come news like this come out when you're at the really important level in the market? Think about this. Where are you coming? Look where you're coming with the news. Is that funny or it's always like this, guys? It's always interesting that you have these moments like this where it comes off and then you have this level here, which is going to be fairly important as well. This is a major level I would watch for on a bounce if we lose this 3,700. But this is simple what I'm going to be looking for tomorrow. I don't expect, unless the Feds, if they just say emergency cut, we get 250 points tomorrow.
Oh my god.
If they say the word cut, emergency, watch. Just watch how we explode. And then you retrace all of it, because that means eventually you're going to fuck up the inflation and you're going to create a bigger problem.
Yeah, I'm definitely liking the risk reward of retesting PDL on the week or yeah,
on the weekly, yeah.
Yeah, going up.
Okay,
Definitely
and just use the, you can definitely use the fibs and intraday, right? You can go from here. Your 50% is also here. If you guys use those 3 that I use. And GV also uses 70.2. It's actually not bad. I've been testing it. It hits. So you can definitely use, my pockets here, but you extend it by 2 points right there. So sometimes it's good enough for rejection. You see where your golden pocket is for a rejection. And if you guys look here, in terms of price, this almost seems like it's your new top and this is your new bottom. So what you could do is you could grab from here to here and you could draw this and see something interesting. So from here, from Thursday to Friday, 2 days, POCs where?
The previous week value area low.
And PD value area high and 50%.
Oh my gosh.
So if you're able to regain that level, it's a lot of chance that you're going to rip higher to this PDH area that I highlighted. In this case, also value area high of the 2 days. Okay. So hopefully it's making sense when you look at these things in the volume profile, right? A lot of things happen quickly and people realize it after the fact. And if I was to look at this on SVP right here, this is a normal, if you look at this, for instance, trend here. So we ran here higher from this area, right, on December, and you guys see, you can notice value areas dipping higher. Some take a beating lower. Most of the time they will hit VPOCs like this one here. There's a VPOC here. They came back, retested it. So now if you look, right, a lot of these VPOCs in this case have been revisited. There's a VPOC here revisited. This one here also revisited. You look at this VPOC here. Remember when I said these 2 days are really bad structures and they're not going to hold a lot of value for bulls? This was a VPOC right here that we looked at and look, they pumped it, came back below it. And now if you look to the left, there's really not much. There was this level here. And beyond that, you have, I would say, potentially, if you want to call this a VPOC at 380. So another, let's say 5 points of a drop, not too bad. And then you could expect a lot of buyers to come in at this level right here for SPY. Because if you grab from here, I'm just grabbing the full data, you're right here at 381. It's going to be a crucial level on SPY itself. So you're zooming up higher, creating values, and then watch this now. I just want to show an example. Where is it? So if you look here, you're trending higher, right? You have P shapes all over. Then here you get a massive long B, right? You add a long B and then you cover one more time and you push higher and look at this shape here. This day here, you have a lowercase b, and usually this means that the longs are trapped on this side here. You should not be breaking this anytime soon. In this case, it was, what is this level? And we never broke that again. So when you see a lowercase b, an uptrend, usually the high of that is going to be really tough to break. And just think about the psychology of what happens in a B shape. We did not spend a lot of time at the top level, and the heaviest volume happened on the bottom while you're in an uptrend. Does that make any sense to go up higher?
No.
No, it does not make any sense. It cannot make sense. Then you have another scenario here where you're considered still an uptrend. You're just, remember, retail sees this as a major bull flag. And you see here another lowercase b, right? And you run up and you never take out the first one at the top that happened. Then you have another one here, lowercase b, where you did not find value. You sold off quickly and accumulated here. The auction failed here miserably. And if you look here, look, did we close ever above it? They trapped people here. Did they trap longs here? Hell yeah, they had a P shape, followed from a short cover rally here. You ran this much from consolidation. Okay, I'll give you that. But then you give me another one. Here, you consolidated on a P shape. You trapped them based on this lowercase p. And you never really went above that level again. Not to talk about this initial one. These are levels that you pay attention to. Whenever you have a B shape, you grab the high of that one, you can mark it. Lowercase b in an uptrend high, and you will notice how quickly they don't challenge these levels too much, because they know we spent a lot of time here and we got sold off. So if I was to just grab this one, here's my POC of that range, and look where we rejected. Funny, right? You come back to it and you rejected that perfectly, right? Even though this is your POC, but this is where they accumulated and sold off quickly. This level here is just a reaccumulation for a down point. And that level also plays a role in the longer picture, right? So you'll see now, you lose it, you come back, they gapped over it, they lose it, they went above it, came back and sold off. And now most recent sell-off, what happened on this level? I gave you guys a warning, and I even gave it for people on Twitter. I said, this is a really, really poor structure here. This is crap. If you grab these 2 days, you just grab this to this. I mean, it really is shit, right? I mean, there's no volume, bunch of, low volume nodes everywhere. Distribution is really bad. And then you popped above it, right? So you have from a downtrend, you have a major P shape in 2 days. Once you lost this level here, 4 or 3, I mean, it's hell broke loose. Like, you're not going to go from here. You're just going to accelerate because there's nothing stopping you. Then you have another proper B shape here, and the uptrend signaling warning here. This is your lowercase b, means short, longs trapped. Short B, longs trapped, and here's this one. They dumped it, right? So you could have waited for this POC to break to short. And once it's sliced, you see another lowercase b, right? And here's your, concept of shorting the volume nodes of this one. So you have some, if you look at this action here, if I was to go, let's say on 10 minutes, find it here. So if you look at this on 10 minutes, do you see the volume node here?
Yeah.
And if I increase this to, I don't know what's max on daily. Let's see if 220 does it. Maybe 200 is max. Oh, there it goes. So here's 200. I'll just increase this to make it bigger. Now watch. You see, you see the volume node here? Lowercase b, you short the nodes. Where do we short?
Rejected right there.
That volume node.
I rejected the volume node. Now you have this massive, I mean, look how big this, this B shape is. I mean, it's really, really big. I mean, you're talking about 390 to 401. You're talking about 11 points range on this day. That's, pretty big, right? Well, let's talk about this one then. I'm just showing you what I just taught you in the class. Your POCs here, right? You close below it, I would say, right? You close below it and then you open below it. Once you regain the value, there's a high chance you can go. If you guys recall what we said, if you regain this, what's your first target if you regain the value area low?
POC.
POC. So if you're a smart trader, if you went long here, you're getting out here, right? $1.20 on that. You would have taken that. But then you have a massive shelf that was at one point a POC because they also bounced it to that shelf here. And then you take a look at it and you're like, okay, well, this is probably the shelf that I need to be paying attention to. And look what they did here. Right, they dumped it. And if they broke that one, I mean, look at the size of this giant shelf here. So you really had a couple of opportunities to trade it, right? And then you look at this day here. This is a weird distribution D shape, I would call it, right? So it started as a typical day. A lot of people were thinking trend day, right? And then, I mean, it continued, but it's just, would you guys call this a trend day here?
No.
This is
Right.
not a trend day, guys. You had an auction that led higher, then you had the auction that led lower. Trend days don't have auction that reverses. On trend days, you have a tight base like you did here, and then you continue in the direction that you break the balance. Usually the balance, if you think about this, the balance was here by 10, I would say 1030 right here. It was super tight. I mean, you're talking about 390 to
Yeah, it was.
380. I mean, it was really, really tight. And then they, they broke the balance, right? And you see from the open, they dumped and they reclaimed it and went higher. And usually the low drive open, if you guys look at this, will play a role in this. If you guys look at this level, this is the low drive of the auction. Look, once you lost this, where do you guys think they come back for a rejection? Right there on it. So usually the open drive low and open drive high, meaning the first 5-10 minutes, those are considered a good open drive setups. If I see that, prior to this open drive, there was an accumulation and the extended hours here on SPY. If I see they accumulated here, heavily, let me see, where's 930 here, right there. Okay, so this is the 930. If I see they accumulate, look at this, for instance, this level from here to here. So it points somewhere to this level here that it was. I'm grabbing a lot of data. So 391.68, and then they opened there. Let's see, where did they? So they opened here and they didn't even push it up to this level. So if I was to zoom in, grab this level right here and look at it, this is the level where it's going to be really nice for shorting opportunities. You come in here and you dip below it, right? At 930, you open, you came back right to it, and that's a nice short because you accumulated here. You drove it up. Once you lose it, once that POC loses the sentiment of bullish, now reverse to bearish, it's your trigger first to go long here. And if you lose that one, your sentiment needs to change quickly because this open drive is telling you, hey, we went up, it was a fake test, and you come back and you lost it. And you pop and then you regained it again, then your sentiment changes. You go bullish again and you can catch this. You break it if you're long, let's say here, and you got stopped out, that's fine. Then once you break it and you come back for a retest, it gives you short. That's how you can use the sentiment of the open range and accumulations to your advantage to actually trade and play on the volume profile. And even if you don't use this at all, I mean, let's say if I look at this, there's a couple of weird wicks here. If I look at this day and I'm like, okay, well, let's consider this to be the, the high. Like right here, this is the high, this is the low. It's fairly simple. Now, this is the range that I'm interested in that we are trading. And I'm just going to take a look what the volume says. And if I see this, right, so I'm able to tell that this is my, value area high. This is my value area low of this. If I do this, now I'm able to tell where's the second and third standard deviations. And that would be the same. And what did we say about second and third standard deviation? So if I change this one,
Goodbye zones.
they're most likely the extremes where people are going to show up on the opposite side. And this one just slightly shifts here. So this is your, from standard deviations, what I'm highlighting now is the concept of second sigma and third sigma. And what do you think happens? Every time you came back to the second and third sigma, what happened?
Buying and selling.
Honestly, it's not even people. It's just the algorithms pick this up, guys. They will do this all the time. Here's your second and third. I mean, it's almost like ping pong. You get back here, you come back, I'll buy it because they're finding value. When you go up here, I'm going to sell it. And then if I look at the POC, I'll know where to at least trim some points. This eventually, I promised you tomorrow here, this is going to shift and be here. Unless we gap down on some federal news or announcement, most likely this POC shifts. We're going to spend another full day here, shift to the upper side, and then based on CPI or whatever comes out, we break higher or lower. I honestly think we go higher for now. Markets never crash when everybody's expecting them. Okay. If you want to know how you set up this, I don't know if I covered it or not. On FVP, you can just change your, your inputs, right? So 68 is a natural for standard deviation, and this would be the volume area. Let me disable this. So this is my 68. Let me highlight this so you guys can see it. This would be my 68%, the purple and the green. That's where 68% of the volume happened. If I want to change this, I can click that. I can change this to, let's say, 99, right? This is my 99. I can save this as a template and I can say 99. And now I can right click this, change the template to 68. And here's my 68 volume. And I don't know why. Freaking picking this up.
Shouldn't you have roses 100, not 200?
It doesn't change it won't change the
Right.
levels. No.
Not by much usually.
No, I changed it earlier when I was playing with the volume nodes. Yeah, it doesn't change it at all. Actually, should not. It just amplifies the rows. There, I'll show you.
It doesn't work with the fixed range.
Okay. Well, sucks. So I'll do it manually real quick. Here's this level. I change this to. Here's that level. It shifted. Nothing on the bottom, shifted a few pennies on the top. I don't really.
Right. It's just more rows that it visually represents.
So sometimes on the VRVP, the visual range, if you guys look, sometimes I have it, at 220. I can lift this up to 500. And here's my, if I look at it on 500 now, look at the levels, right? You have a little bit more details in terms of those shelves here. If I change it to, I don't know what we usually use, 200, they're gonna look more squarish. There it goes. So same concept, just.
Well, what you're doing is you're using 500 rows to define the high and the low.
Exactly. Yeah.
200 rows. So it's just a little more detailed data.
Yep. Okay. So I think that'll be it for me. I'm sorry it took a long time, but I think we covered some important aspects of trading, and hopefully, you're not going to get it overnight. You have to think about some of this stuff and see how you can use it. But as long as it starts clicking and you're starting to put this jigsaw puzzle together, you're on the right track. It will not happen overnight, I promise. You're not an Einstein, you're not Nikola Tesla, you're not gonna just pick this shit up.
Thank you so much, Shorty.
All right, guys. Well, I gotta go work on the project. And
Thank you, Shorty.
Have a good day.
You guys have a good one, and I'll see you guys tomorrow. I'll be live.
All right, see you
Great.
tomorrow.
Thank you.
Bye.
Good
Bye,
day,
guys.
everyone.